Good morning. Guten Morgen. We're live. Want to be streaming today. Ooh, what a rally. Get set up here a little bit. Still don't know how this scheduling thing works. There we go. Word. All right. Sharing it on Twitter. And those of you in Discord. What gap up. 20 down a row. Morning, Tao. Thank you, Tao. Morning, Indy. All right. So I guess the market liked the data and Tesla's earnings. Let me get the Discordian link. What the heck? There you go. Ah, Tesla puts. Where do you think BBBY will head to? Like today? I don't know. I'm starting to think that MLK holiday maybe did push back OPEX obligations. So, but what's strange is BBY had that gap up though yesterday. That seemed much more like an OPEX move than this small move today. So I'm not sure. It's holding that nice support where it was. Still has the inverted head and shoulders. I think it could move up anytime. The market's definitely moving up almost 0.75%. Pre-market. Wow. So 403. I was saying 408 would maybe hit a resistance, but I mean, there's not even gonna be much room left to go along here if it does get all the way to 408. It's basically just the amount that it's gone from here. So from here to here, where we are now, is a further distance than it is from 403 to 408 now. Look at that. Holy squeeze. I mean, I didn't think the data was that bullish. The jobs or data is like really strong still, right? I don't know what to do. So keep hanging out, I guess. Maybe just ride my contracts. As far as GME, possible I'll be getting back in. I mean, again, I want to see the volume. Oh my gosh, look at the SPY. This is freaking crazy. This is more of a gap up than we had a gap down yesterday from Microsoft. No, I didn't go through anything. HLBZ on the move, 17%. That ain't bad. I'm getting shook with all this volatility though. Woo. The week of SLD period is pushed back one day when SLD actually does something. Holiday in either the week. Oh, so it doesn't. So it could have been from MLK. Yeah, John Parker came spewing that hopium to me yesterday, and I'm like, don't you dare do that. Monday was abnormal. Yep, that was strange. All was just tearing. Yeah, it's definitely ripping. And for my trend line, depending on where I draw them, like if I draw right here, where it's at, which is a contact here and then here, basically the last 3 days has shown with these wicks that it's basically using that breakout as resistance or support, which seems very bullish. Now we're gonna open up way up here. Holy crap. It is a bit of hopium. It's almost up 0.8%. How bullish. And dollars up from yesterday. See what happens at open. What happens today? Might be just a mellow day. I don't think this exuberance is going to continue today. Probably just some consolidation, some chop, and dare I say a sell-off on Friday. But I don't know. Maybe it wants to hit 408 before then. That's so juicy. Ease this up and stall, crash it. Yeah, so far it's not been a very ease up. It's been pretty aggressive, but yeah, this could be one of those blow off the tops. You know, and that brings me back to the whale gif. Often shared on Discord when SPY would just be ripping uncontrollably. I think I called about 612 blow off the tops as it continued to just keep going higher. But never did, it just kept going up. Doesn't actually blow off the top. Thank you guys for joining this morning. I hope you had a good evening. Got some good rest. Hola Contra. Thank you guys for your thumbs up. I appreciate it. All 7 of you. Buy all-time low. I don't know about all-time low. 330, just straight illin'. Good morning, John Parker. Thanks, Wizard. Thanks for stopping by, man. So, John, maybe you were right on that holiday deferral. I didn't think it could be the week before. Don said it could be from SLD. So maybe we get a rip rally. Very possible. Tesla is yeah, it's going wild. I saw the earnings. They were fine. and I heard the earnings call, and it wasn't anything crazy. They left a lot on the table for their March announcements or whatever. So, I mean, Musk said demand is very strong. I think he said it's stronger than it's ever been. I think he used those words. But Tesla wasn't really moving a whole lot on that. So all of this, I don't know. Yeah, I mean, it was pretty close to expectations. Balls deep on holiday deferral. Woo, holiday deferrals. Yeah, I might potentially become that way. SPY's definitely making things seem awful frothy. Gamma ramp? Want Tesla? Record high demand during China shutdown? Record high during what? Record high what? Oh, BBBY with a move up. Tesla. That is kind of peculiar, isn't it? Because isn't China's? I mean, that's high on the list for their where they sell to. I think, right? They might even be number one. I feel like they may be past USA. I could be wrong. So that's the bullish sentiment. They had record high demand, and China wasn't even open. And the Tesla investors didn't think of that until around 7:30 this morning, 7:45. Nice, got some weekly calls. So yeah, market maker's pricing in, I think, 10% or so on Tesla. So it's still within what basically was priced in on your calls, unfortunately. You haven't beaten the market maker yet. So remember that when it comes to open. Might not be one to diamond hand. Yeah, my LVS, I mean, I guess the whole market's rallying, but I got puts in LVS. Earnings to me are pretty much just roll the dice. Good or bad, and go up or down. They did, I think, beat a little bit. I think part of the rip is just from these price target raises. Misses EPS. Okay, so missed sales and missed EPS. And it's ripping, so I don't know. Maybe they had a very opportunistic outlook coming into a recession. There's a nice candle on GME. Ding, 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 we are open. I'm gonna pause the Yaz for a bit. Get figured out what's happening. Okay, HLBZ is top on my watch list. Gonna keep a close eye on GME to see if it does start to get squeezy with volume. Oh, actually. Yeah, remember those cover calls opened on GME yesterday? Should I close them right now? Jeez, SPY's new high on SPY. Look at that thing squeeze. Holy crap. Oh my gosh. Oh wow. Yeah. That's crazy. So HLBZ is up 18%, Tesla 10%, GME 3.8, BBBY 6. GME is looking awful, awful frothy. I closed my cover calls for loss. I didn't hedge yesterday at all. I just went full on flip. So yeah, that bit me some. May run. Yeah, I forgot when I opened those cover calls though too that I wouldn't be able to close them same day, which kind of wrecked me. $403.91. Wonder what my margin will allow me to ride this up to 408. Express is even getting a gap up. Hmm. Jimmy just mirroring spy. Tesla did open at 160. Time for BY? Maybe. Yeah, I mean the options chain did get a little cheaper. It's still pretty high. A rally today would most likely continue tomorrow, which would be crazy. For the options. Not seeing the higher block trades. Yeah, I mean, that's a massive wick so far. Arrivals up 10%. Buys up 0.8. Retro 13 days by tomorrow. I'm not sure. Has it been 13 days? What does 13 days signify on Retro? SPY still moving up. Wondering if I should close and wait to reopen. Because it seems like it's gonna go to 408. GME not getting the steam from SPY again. "14 days is forced cover." Oh, that would be neat. It's tomorrow. Hmm. What's this volume like here? 2.3. Not as much volume as yesterday, but it is green. A lot less volume on BBY. All right, what data do we have today? I think it's mostly come out. I think there's maybe housing data. Yeah, so jobless claims was a tiny bit higher than forecasted, but basically what's forecasted. Core durable goods orders. SPY's moving again. Forecast was 0.2, actual was 0.1, previous was 0.1, or PCE. They were all very close to, I guess durable goods was a lot higher than forecasted. Initial jobless claims. SPY's moving up, 404. Yep. This feels like a blow off the top. Just how long does it last? Does it last till tomorrow? Does it last till Monday? Last till CPI? GME is. Bleh. Initial jobless claims. Real consumer spending. Retail inventories. New home sales is still to come out at 10. Natural gas storage at 10:30. Couple bond auctions. Fed manufacturing at 11. Amy's getting dumped on. Yeah, neg did look nice. Thought about that the other day, but I didn't have capital because GME. But now I do. Whee! GNS making a nice little pattern up here. Hasn't even come down enough for this RSI to cool off. Double the likes, that's what's up. What do you mean double? We were at 40 yesterday. Wait, 13. But thank you for your 13 likes, guys. Very thoughtful. And a day? Maybe. Might, yeah. Or maybe tomorrow. But how high does it go before that? Maybe they push it out till next week. Visa? Yeah. America and Germany are giving them tons of tanks. GME getting dumped on. I just didn't want to hold cover calls. I took a loss on it, but I basically bought in the morning excitement, which you don't do. So I'm 0 for 2 on that with GME in the last week. Or 2 weeks. Spy's coming down a little bit. Would be an engulfing candle if this closes like that. We're super early yesterday with your likes. Well done, sir. Okay, I might do some cover calls on BBY. Jeez, there's no premium at the 4 strike. I guess that is pretty high up. Are the yeah, they over $3.50 in BBY would be legit. There's an engulfing candle on the 5-minute on SPY. What's this support on? Down here, resistance. Okay. Got an order to sell some covered calls in BBY. I'm not even gonna mess with Jamie right now. Might short puts on Jamie today if it gets a pretty good drop. But I'm gonna just leave cover calls alone for now. Day trade Jamie puts? It's easy to make money on GME if you just get long puts, since it trends down like 80% of the time. It's much easier to time because you're right 80% of the time. Trying to go long on it is The windows are so short. But maybe that's changed. Maybe that's changed. Maybe it's a normal stock now. I don't know. Open door. Opening doors to a green portfolio. One house at a time. This one looks nice. Looks like a lot of the other ones. See overall green. Yeah. Thoughts on rate hike next Wednesday? Higher GDP and lower job than expected. 50 off the table. Oh, on the table. We'll see what the market. I don't know what they're pricing in, the Fed funds rate or whatever. But yeah, I don't think 50 is off the table. What do we do? He did 50 last time, right? He still hasn't done a quarter. So I think 50 is still on the table. What was it? Australia's CPI numbers came in higher than expected. So yeah, there's data out there that would make them continue at the pace. Yeah, I think you're right. I think they are pricing in 25 basis points. So, um, yeah, you're gonna get blow off the tops before the dump. And same with when it rallies, like you're gonna get a big scary sell off before it rips. It goes both ways, and oftentimes it seems like it's just past that resistance or just past that support, and just to get the last little bit of FOMO. IDEX looks like boost is coming. Here's a tweet on that. After two consecutive, I'm gonna lower my bid on here. After two consecutive negative quarters in Q1, Q2 of last year, US real GDP bounced back in Q3, Q4, hitting new highs. The year-over-year growth rate has moved down to 1%, the slowest since Q4 of 2020. US real GDP. What we're didn't even see. Hmm. That's a pretty big sell-off there on the market. So maybe blow off the top. I guess shaking on my covered calls, but that's okay. Okay. SPY's still up a 0.25% though. I am not a financial advisor. So was it last Friday also we had a rally? Market rallied. There's been so many Friday rallies into Monday. Yep, last Friday was a rally. So if we change that trend, we might have hit a top. We actually are coming down. And I think if today's even like this, even a red candle, even if it's positive, that's not looking too strong for tomorrow, I wouldn't imagine. This frothiness has to just basically go insane and short squeeze at these levels because it's got to be FOMO. It's already at such high levels, people wouldn't want to go long unless it's like, yeah, FOMO. So this Friday, my take at least, and this Friday, yep, last two Fridays, big green candles, this one and this one. And then this one, last 4 Fridays, all big green candles, followed by 2 out of the 4 were gap ups a little bit. Yeah, Dink pointed this out to me. He pointed out back here when it had been like 2 Fridays, 3 Fridays, and now we've done 4 in a row. Yep, need to get back on my stress-free farm. All right, 7 minutes. We'll have new home sales. I don't know. Let's see. What are they projecting? Oh, it's coming down. New home sales. All right, here it is. So previous was 5.8%. Forecast for this time is negative 4.7. That's insane. Oh, month over month. So yeah, they're forecasting super low. So even if it is super low, still it could be bullish. Or is it 4.7% less than that? No, I think it's no 4% 7 negative, yeah. Okay, 6 minutes. Need a little green pop on BBBY. Get this covered call filled. Volume is like way lower on BBBY this morning. Yeah, there's some last couple of weeks. Yeah, there's some RSI divergences for sure. That was one of the things that turned me bearish on SPY and GME. You can see it on the daily, like the hour for sure. Well, but on the daily here, just with these candles too. So we had that on SPY, but then it got very subdued with the last 2 days. So it was here and here, but it wasn't very exaggerated, you can tell. The extended hours on a little longer. I don't know how they're extending out this cycle, but it seems like we might be in this area here, because this has all looked the same so far. If this bottom ends up turning out to be the same as this trend does from these double tops that we had here, then yeah, we're looking at least another month before this move, and that move might start at like $10. if it is a new low, right? %17 down. Let's just see what that is. Buy's selling off here. Not much. That's $13 if it's 17% down from there. We'll see. That's a big sell-off on SPY. This stupid contract never got filled. Yeah, it just erased a lot of that pre-market. Tesla also dumping. Hope you guys got out of your Tesla calls, especially weeklies. A pretty big reversal on everything. All right, 1 minute for housing data. See if that moves the market. U.S. Justice Department announcement on international ransomware action to be related to Hive ransomware. What? Jamie Dimon says crypto is a decentralized Ponzi scheme. All right, 50 seconds. Everything follows SPY. The whole market's just data driven. And yeah. Yeah, it could have a bounce later in the day for sure. Doing some scalping. Or you're still a little heavier on the advancing side. There's a big take profits in. But might end up just being kind of a choppy sideways day. All right, housing data. .3% gain month over month on housing. What was predicted? Oil and gas, yeah, I agree with you there. Once those start to make their move, I think that'll be a nice leading indicator potentially. $616. So here's the data. There are new home sales 616,000. Requests 617. So basically right in line. Month over month, I don't see it yet. Wholesale inventories. That was this morning. By the coolest ticker days. Am I coming down here? Erase all these levels on here. Mess. Here's what it does at yesterday's high. Merger? I don't know. Do you see any news? Stock tips. Yeah, I saw. I mean, beat earnings. I mean, they're all the earnings have seemed pretty close to expectations, though. Nothing's been like, wildly out of estimations. Higher margins, laying off 3,900 people. Yeah, some stocks just get the hammer when they fire people. Other stocks, it's the best thing ever. Yeah, Tinder is testing their user interest in $500 monthly subscription plan. Can you guys explain to me what would you spend $500 on Tinder a month for? What do they even have that costs money? Thank you guys for your 20 likes. I appreciate it. Looks like markets finding yesterday's high as support. Pretty big wick down there. Emojis on Tinder? $500 worth? The most swiped in your location? I don't even. So it just gives you access to more people? The free service doesn't give you that? Yeah, SPY bounced a little bit on that low. Big range though already, and it's only been 30 minutes. Oh, most gives you access to the most. Oh, most swiped on their page. What the heck? That is so ridiculous. Just paying for hot chicks. How is that not like yeah. You're joking? I mean, you might not be though. You don't know. No one's had an explanation. I don't even know what's paid for on Tinder. And everyone that does is too scared to say it. I was thankfully happily married before that was popular. I didn't have to go swiping for chicks. The GME had 1.1 million shares available. Now they have 100,000. Borrow fees at 20%. Yeah, I've been married to, I know, I like my wife and I both have been like have talked about that, just how stoked we are that we got married before we had to deal with social media trying to find just self-promoting and like, oh my gosh, Tindering and imagine what I would have. I just probably, yeah. Alba's holding up pretty nice. I was actually thinking about getting back into GNS. I think I want to. I'm sad. This thing is just not cooling down at all, but it's consolidating nicely, just such a high level. Definitely lucky you're old. Yes. Good business plan. You're right. No, that if they haven't done that, they should do something like that. I might start scaling into a position on this thing. This guy's such a such a hype promoter guy. It just and he hasn't offered shares yet, so that's a good sign. Already hit $6. It's the naked profiles. Pay subscription to undress your Tinder swipes. It looks like it wants to fill that gap. These other companies jumping on the bandwagon, I'm a little more cautious of. Like I like HLBZ, but yeah, I gotta get some of this. They don't have options, do they? BFRG, is that real? Mess with me? Bullfrog Holding? Not trading yet. You waiting for that one to go live? Do you have shares this one already? Looks like a oh, it's a biotech. It's like a really weird cup and handle. You can see it. Only a bit. Nice. Is that why you're in New Zealand, right? Is that why you're up so late, early? Dump your IPO shares. I see. John, a tough question, man. I mean, yeah, I'd probably raise my hand to that. Swipe a few hundred, filter from there. What are you paying for though? Why would you pay for something on there? Like, what services do they have you'd pay for? Are there like ads that you get rid of if you pay? Help is moving up here a little bit. A bottom on what? SPY looks like, yeah, it might be, it might hold up that yesterday's high. Whether it reverses and makes new highs today, I don't know, but uh, we'll see. I mean, it's wicking pretty big down here. We have that MACD crossover and we're under the 9 moving average, so it still could fill this gap. Also, kind of a bear flag it's building. GME. Hitting a bottom, like a daily bottom. It's just moving with the market, so basically the analysis I just did on the market would probably apply to GME. But if it's like yesterday and how it's been a lot more downside than SPY. So the rallies on SPY, it'll be subdued on GME. But so far, it's you can even see it right here. Bull flag, and this thing's been consolidating flat. This one kind of, or sorry, bear flag. This one bear flag, but it's just not even consolidated. It's just kept dropping, and then it's like it's similar, but it's just weaker. And the Sims to dump money in hopes of finding a supermodel that will live with them in their parents' basement. The dream, man. You still bullish? It's like consolidation and a potential move to the downside because of this divergence. But yeah, sometimes it has its rallies when it looks the worst. I'm gonna try and remember just to play the IV. I meant to. I even saw it. I even thought about it. I just didn't do it. Once it gets down, it's getting there. Current IV is 93%. I like to see it in the 80s, and then yeah, then start going long. Options, but not even just options. Like just go along with shares. Is moving up to VWAP. Home prices will increase 0.3% to 385,000 next year from an estimated 384.50 in 2022. Little move up there. Everything. I don't hold any crypto right now, no. I probably will, but I'm waiting for a bottom, and I think I can time the bottom a little bit better than this where we are right now. Keep bullish for the day. What does that mean? Like green day? Have a green day, or John. Got more shares and calls. Expecting some news. SPY breaking VWAP here. Moving back up. Back up to retest the high here, supposedly. Oh, swing shares into tomorrow. Pre-market tomorrow. I mean, I wouldn't be bullish on a pre-market. GME usually never has a gap up. Today it did, which was unusual. And Fridays historically are usually bad on GME, so yeah, I'm not bullish going into tomorrow at this point. If we get a big move up today, then yeah, probably continuing tomorrow. You guys are buying BBY. Yeah, I mean BBY looks nice. It's holding up a nice support. Again, that little inverted head and shoulders inverse, and then just kind of consolidating in this bull flag of areas of sorts. SPY moving up again. BBY's getting some action from it. Party City. Anybody still holding Party City? Open door. Coming up on that $1.8 resistance. A lot of volume this morning. Via. I feel like this one would have been a good buy. Keeps showing up high on my watch list. Maybe that are 335 cheap. I agree. It is a good deal. BBY if it's not going bankrupt. It's a good value play right now if it's not going bankrupt. So it's hard for us to know because there's so much misinformation out there and there's so much short and distort campaigns and and even what the company said themselves, it wasn't. They didn't say no, we're not going. Yeah, it was pretty grim. Biotechs, they might. Also, seen 40. Whew. I remember she 40. TRKA. Yeah, chart looks nice also. Yeah. Quite a while ago. Yeah, neck is looking nice. BBY was 30. No by heart. What sounds like a merger after hours? Fed prepared to work with Congress on new regulations for CBD. GME actually did melt up to VWAP here, so not as weak as typical versus the SPY. Almost 30% of the nearly 4,500 professionals surveyed in January by Fishbowl said that they've already used Chat GPT or another artificial intelligence program in their work. Makes sense. Market is rallying again. Yeah, maybe this dip was just to take profits. We do actually end up having a big like 2-3% day on SPY. Um, 2-year anniversary. I feel like we just had our 1-year anniversary. GME is moving up and a little bit of increased volume these last 10 minutes. Nice, Hurricane. Well done, man. Yeah, it might have just been a take profit sell off. I mean, that was pretty aggressive, but I suppose that's to be expected with a gap up like that. I don't know. Pick up volume? No idea. I thought we would after that what was that, Monday? Friday? Monday. I thought that was the beginning of our volume picking up on Monday. And then I figured we'd rally into OPEX. But yeah, it didn't. Got shut down. So I'm thinking more this range now. Instead of being here already. I think we're maybe here. Desert oppose a chart left out the symbol. U.S. Treasury designates Russian private militia as transnational criminal organization. What? Avia. Nice little move on Avia. Continuing rally. Breaking that resistance from back here. Yeah, probably fill that gap. 50 cents. Getting not too far off. Why did the BBY run ruin you guys? What do you mean? See how much bigger that candle is on GME compared to SPY? Just got shut down there. BBY couldn't break VWAP. Okay, we've got natural gas storage, I think, in 3 minutes. See. Thank you guys for your likes. 25 of them. Well done. I can back down to VWAP. I'm buying and selling like crazy on Webull. This was my money to hidden fees violation. I don't know. You have to look at your statements to see what fees you're paying. I don't know what violations you're talking about. If your account's under 25K, then yeah, you're limited on how many day trades you can do. There's not fees on stocks. I think it's commission free in and out. By GME pre-squeeze. Me? Um, I had traded it before January. I traded a little bit. Just this. I think it was just the shares. It was actually on this Webull account. But yeah, nothing I held through January. January I just watched. By the time I saw it, excuse me, I think it was at like 17 bucks when I saw it, and I was noticing it and kind of just watching it. And at that point, I was already like, well, this thing's going crazy because it had gone up so much. So I just waited and watched, and then forgot about it because it kind of consolidated for a bit, and then started watching it again once it hit like I think 75 bucks, 80 bucks, and then I was watching it the whole time. uh, yeah. Sometimes chasing you can do well, but it's an exception, not a rule. Started with 100, never did trading, and first week up 72 cents. Well done. BBY got a pop. Did a little pop through VWAP. Little V pop. $6 free stocks. Nice. November 2020, you started buying shares. You know, Webull gave out, and Robinhood gave out GME stocks before January. They were like, we've got so many of these fake ones, let's just give these out. Doesn't cost us anything. Well, my long term likes this move on BBBY, and GME coming down isn't affecting it anymore. I guess it's not down, it's flat. Oh, it likes the Tesla rally too. Marking the top. Yep. Up. You averaged up, Ace, on the after you bought in at 30? You're just saying right now. You guys are getting pretty bullish on BBY. HLBZ 11%. Tesla back to 10%. Battle for 180. Oh yeah, natural gas came out. Didn't really cause a move. US banks' real estate loans have soared. Well, yeah. Ukraine needs up to 7 billion for urgent repairs in 2023. Oh man. 3.4, 3.5. It is, yeah. But this is solid support down here. It's 320. So it's in a range, it's consolidating. Steady growth on Key. Is that Key Bank? Yeah, I don't have any banks. Not gas moving up a little bit. You're going to your 21st? Like you're going to have your 21st birthday? You're in top chat? that good? That bad? The IAF is moving again. Banks are no, I think banks are good. You know, good dividend. Um, I'm I am reluctant to go long on anything for the long term, and you know, I still think we're going to see a big haircut across all equities, and banks could, you know, I think they could drop 50% or more, all of them. So yeah, but yeah, I would probably pick up J.P. Morgan for bank exposure. I already have quite a bit in the not quite a bit, but I've got fintech stocks, so I already have some exposure to that a bit. You average up on GME from 45-ish. Oh, nice. Um, I have before. I've traded VIX and UVXY and uh, I guess yeah. I don't know. A lot of my trading I've been doing on the index is just with futures. So I'll just trade ES or micro ES, or I was looking actually at the VIX futures, but it's the same amount of borrowing, but the movement on it is you don't get as big of moves. It doesn't seem like that doesn't make sense to use. But we'll see if we get a big market crash or dump at least. We'll see if it does better. So I open these up on a paper count to see how they moved. Gotta so see like I went long on ES and long on VIX at the same time. They're both the same amount of buying power. The ES is up 1500. The VIX is only down 150. So and maybe that's just right now. Like SPY's rallying, and that's an indicator this is fake because the VIX hasn't really dropped. You know, like you can see here, it's not really dropped. Um, so yeah, I'm bearish on the market. I think we're at a top. Dollar's coming up a little bit. This thing has just rallied today. I'm bullish on the dollar too. Got an RSI divergence right here. Make another one. Oh. MACD cross bullish. It's also at the support from back here. So yeah, another inverse of the market typically. Oil could be hitting a top. Would probably bring the market down if it came down. I take away from today's lesson. I don't have it yet. VIX confirms my bearishness. Yeah, helps you to hold through these little squeezes that happen. There was a dollar, yeah. Top chat. Yeah, you say I'm top chat? I'm in top chat? Where? I'm oh. instead of on live messages. It's no different for me. Yeah, I think Bitcoin will make new highs, new all-time highs. I just range bound. So am I up on these? Nope, still down on my cover calls. Oh well, wait till tomorrow. I just stepped away from the computer this morning. That would have helped. Going soft on inflation will plunge economies back into the recessionary depths of the 1970s, former U.S. Treasury Secretary Larry Summers has said. Is that a strategy? Considering gold market cap is 11 trillion, isn't. Yeah, that's a good point, X-Ray. I don't stream to market close. It's not necessarily a strategy. I do a video, do a recap video, and yeah. I don't want to be doing that after market closes. Express moving up makes me think makes me a little more bullish on GME. And Newegg, really. Even Sen's up here. CNN. Oh man. Everything but GME. All the sympathies. There's a rival. That's another good point. I didn't know that gold increases its supply 1% per year. How consistent is that? And how can they be so consistent with that? How do they know? See, it did it again. Weeble keeps erasing that trend line. Oh, I erased all. Never mind. I swear it's done it though. The IAF continuing. Ace Ventura, thank you. Very generous of you, man. I appreciate it. that calls for a GIF. Thanks, Ace. Appreciate it, man. Ah, stop it. Little Mexican dancing egg. Mexican because the maracas. All right, I mean, Ace dropping a 10 dono. We might rally this week. That's a good way to get it to rally. I'm pretty certain. Could be a lemon. Yeah, that could be a lemon. Yeah. The shape of the top of the head leads me to believe it's more of an egg head. Definitely a lemon. GME's borrow fees at 20. Whoa. See, there you go. There's a little pop. Pop to VWAP. Pop through VWAP. So BBBY, when they've gotten the shares available, the fees come down some. Looks like 23rd and 24th shares popped up. GME just gonna wake up in the middle of nowhere. Someone friend, thanks, John Parker. Your hopium yesterday really got me shook. I'm like, totally forgot about MLK and OPEX deferrals. I'm like, dude, is that gonna happen? Thank you, John Parker. I appreciate it, man. So it could happen. I mean, it's, we've seen it happen in today. I would be back in some swing shares. Probably wouldn't mess with options. It could happen because I mean, I agree. I closed a lot of longs yesterday, so you guys you're noticing my sacrifice, and you're rewarding me generously for it. So I appreciate that. One, nothing crazy. Spies just completely squeezed out of rationalities. Jobs data, all that came out this morning. It wasn't necessarily bullish. Tesla had earnings. It wasn't that. It was fine. It was good, not crazy, and that kind of ripped everything to crazy highs. It was up almost 1% at open, so sold off, and now just kind of consolidating since they're in GME, kind of the same deal. BBY a little bit stronger. Has a leaf? Oh, that's true, you guys. I didn't even notice the leaf. Now we've got a lemon, a Moroccan dancing lemon, and a super hyped pear fan. All the fruits. Overreaction expected earnings. Seemed like it, yeah. Yeah, SPY, very frothy after hours pre-market. And now just chilling out a bit. Put my trend line back in here. Maybe we could just do those two, see what lines up. Something like that. Oh. So that, if you draw like that, that puts it a little bit higher. Yeah, and that actually clips this peak perfectly. I'm fine with my short for now. Scary though, wow. There's a sell-off right there on SPY. Back to the lows, see if it fills this gap. It's a pretty big candle there. Are we gonna get one of these days? This is what I'm wondering, if it's like this. Dude, I already thought that we were in this range right here. See, this just played out in a shorter time frame. This is dip and then this new high and then the divergence. We had the dip, new high, and that created that divergence. But now we've kind of hung out here longer. But now this is a new high, and maybe it'll be like this one, new high and a huge red. Such a bear. It's not that I want the market to go down, I want to be right. And just so I can be consistent and grow in confidence. All right, new low. SPY is almost back to break even. Broke through yesterday's high. See if it keeps going or not. You guys get that way too? Like, it's fun making money in the market, but if I make it because of an accident, it's like, it's almost not even, it's like I don't even like it. And even if I lose money, but if I was right, I think I like that better. Because that's, you know, consistency. That's where you can build up and get kind of a win in the long run. That's when you start writing yourself notes like listen to yourself. Buy SQQ and it looks bare. Yeah, I guess if you don't want to just short QQQ, you could just do that. Just shares or options, or how do you play it? Let's hear what this guy's saying actually.
Bottom and in so many of these names, I think there is a little bit of a room in the kind of short to medium term to pull back a bit from these levels. That said, with the job market so strong, I think it sets up well for what Mike is kind of laying out here, that it is likely, if we're at a 3.5% unemployment rate, that we don't go into a recession, right? We see, jobs normalize, but we don't see that, longer term kind of recession. And I think if we come out of this without a hard recession, you could certainly see that as strongly beneficial for equities over the 6 to 12 month period. So I think the fundamentals, if you think about the story that way, I think the fundamentals seem to back up kind of the technical picture that Mike's laid out.
All right, I like it. There we go. That's both of them. Fundamentals, technicals. What else do we need? Thank you, gentlemen. Mike McCurr, Nick T on the panel. Trading 360 with Nicole Pedalides.
Pretty big flush there on the old SPY. So now it's red, and it's at that second little peak from yesterday. It's gonna keep coming down here. That's a pretty big drop. Yeah, I mean, volatile, man. It's just been so squeezy. Big on both ends. We're all feeling it. Hey, David. I am doing much better now that SPY's dumping. Yeah, no, I'm doing good. We've got a dancing Mexican lemon and a very berry pear fan. So just sweating this ES short a little bit. Back to 400. See if it bounces at 400 now. I did a mistake this morning. Bought when it was exciting. I'm 0 for 2 on GME options the last couple weeks. Why I don't like to buy options on it at all. Just sell them. Well, I guess puts. Buying puts on it works almost always. Waiting for BBBY news. We're waiting for news on BBBY. We're waiting for news on GME. We're waiting for news on GNS. We're waiting for news on everything. But it wouldn't be news if we were waiting on it. Because news would be something unexpected. So we're speculating on news coming. But so far there's no news. I did open up some cover calls in BBY, so I've sacrificed for the news to come out. In my cover calls in GME, they couldn't handle the heat. They had to get bought back. So I think we just got some more data. Let's see what it says. Oh, composite index, Fed manufacturing. Didn't seem to have much effect. This is crazy. I'll probably need at least till tomorrow to get back to break even on my ES. And even that will be just a lot of volatility in the last 3 days. Bankruptcy and Fed hikes. Yeah, that could be the news. Could be. And look at this. I think what is happening. Let's see. Not really a divergence like we had here, but somewhat, because higher highs and not new highs. That's been waiting for so long. In cosplay. Yeah, a lot of frothiness, a lot of FOMO trying to catch this rally, but it's that could definitely be a top still. I'm still holding this trend line. But we might just trade around in a range up here for a little bit before dropping, which would line up with next week. Yeah, I think we have FOMC next week. So maybe it's week after. Oh, let's hear about Tesla.
2.5 gigawatt hours of battery storage capacity, which marked a 152% rise year over year. Now, next up, for those that are keen on Tesla events, we'll be watching their company event on March 1st. But until then, we really can see the fact that we've started to see shares stabilize here, up just over 8.5%.
Oh, SPY filled that
up
gap.
as much as 10%, but of the analyst community that does cover this stock, Nicole, about 64% of analysts do
bounce at
still
about
rate
400.
Tesla a buy.
Right about
If you
400.
give the average of the S&P 500 stocks, the average buy rating ratio is just about 58%. So the street does feel more strongly on Tesla than other stocks, and we do see an average price target of 206. So things
I could
do
close
look
my
optimistic
short and go
today.
long here, or just ride.
Unbelievable, up 8.5%. What a move. And then we have so much news on the airlines. I know you've got us covered there. We heard from American Airlines. We have news on Southwest Airlines. Jenny, tell us about each of those.
We've had so many
reports
green
with us.
Fridays. I'm like,
Yeah, seeing
it
some
makes me nervous.
steeper selling today in Southwest than American. Both stocks down, though, and I have to say that we'll start things off maybe with the lesser of good news. That's Southwest, that did post a pretty hefty loss in its fourth quarter. No surprise given its holiday fiasco. They did report a wider than expected loss. Their revenue came in around $6.2 billion.
What is that?
This was still an increase of about 22% year over year, but the holiday meltdown ended up costing the company about $800 million.
So that Tesla Semi.
However, they did say in 2020
Watch the video.
they plan to continue to support
I mean, for some
profits year over year.
for some
on achieving long-term
hauls,
financial
it's practical,
goals,
but
and
nothing
separately, we see
nothing
that they
long.
are being now probed by
What do they
the
call
US
it? I
Transportation
guess just long
Department
distance trucking.
regarding this
It's just
December
not practical.
holiday disruption.
But
So
for something
I
like
think at this
Pepsi,
point, they just want to put that
it fits
event
perfectly into
very
their,
far behind them.
you know,
But American, on the
distribution
other hand, did beat its street views on its
city.
bottom line. Revenue also rose almost 40% year over year. We're seeing based on
if you watch that video though, he's in a lot of traffic. He's doing like 50 miles an hour.
The company does now expect its first quarter 2020
I think his average speed is like
adjusted earnings
40
per
something.
share to break even.
So
And
that's
they also
all
highlighted their
beneficial for
commitment to
an EV semi
profitability
too.
going forward, and said they were one of
Just
the more
going slower.
reliable operations over the holiday period, leading the industry in their performance over that December
It's all off
month,
Monday.
which led to record
Maybe, yeah. I
full
mean,
year
these
and fourth quarter
freaking
revenues.
Fridays
So
though.
almost a slight
This
hit
was
at
a
Southwest.
Friday.
They actually highlighted the fact they were able
This
to
was a
navigate
Friday.
that cold weather and some
That was the-
disruptions
oh, yeah, this was a
over
Friday.
the holiday period better than Southwest, although shares are down just over 1%.
Big green Fridays.
All right. Thank you for all
Probably
of
bring it
that.
up to
Jenny Horn, great
408.
to see you on this Thursday morning. A good look at Tesla and the airlines today. Jenny Horn, markets correspondent.
But today the
at
market
Ameritrade
is
Network. Thank you.
looking a little
Let's
weak.
get some insights.
Maybe we won't
Shape
get
of the
Green
markets.
Friday.
For that, we welcome in Mark Hamrick's with us, senior economic analyst at Bankrate.com. So we've had a busy week of earnings, but the economic data pouring in today, and basically we're still seeing a lot of strength. Jobless claims was there. We had a GDP print.
Coffee
I'm
beans?
curious to hear durable goods. I can't wait to hear your big picture thought here.
Well, it's great to see you, Nicole. First of all, on the GDP, wrapping up the 2022 story. In sports terms, it was a strong second half comeback after those contractions in the first two quarters of the year, when we remember there was so much banter about whether there was a recession underway then. And that's sort of been quieted in terms of the second half of last year. But now it's a whole new ballgame, 2023. And, we see a lot of things that, frankly, don't all work to make the puzzle come together in an elegant way. These new jobless claims coming in at the lowest since last April. The job market remaining quite resilient. I think we still need to be on watch for the possibility of a recession presenting itself here in the near term. And the key really is what is the depth, the duration, or severity of that recession? And it could be one that's quite mild.
Right, understood. So how do you think the Fed interprets all these pieces of news that we've been getting and looking at this data so closely?
Well, we've had plenty of Fed talking heads of late, and they have generally been
That is
sticking
engulfing
to
candle
their
at this port. I feel like
collective mantra of
if I was going to
interest
flip, this
rates
would be
are
the
going to
spot.
go higher and stay there longer. I'm less confident about the latter part than I am about the former part, meaning, obviously I think we're probably still in line for another 50 basis points here, meaning two 25 basis point rate increases. That is if things continue to hold together with the meeting next week and then the following meeting after that. And then maybe we'll finally get that pivot or pause that we've all been hoping for and investors are praying for.
Yeah, I think you're right
And then the
about jobs.
question really is,
I mean, that's what they're trying to
does
do.
the economy
If
hold
the job
together
market doesn't
very well
come down,
in the
we
months
have
after
high
that,
inflation.
when we
We're
acknowledge
just
the
going to be in a
fact
high
that
interest rate environment.
monetary policy works
Definitely.
with long and variable lags, meaning it takes a long time for this interest rate medicine to really filter on through the economy. And I do worry, Nicole, that there may be some things sort of lurking out there in the economy that we're not seeing that could be more systemic risk. But that's sort of the definition of a black
GME.
swan, is they're not
No,
easily
just
seen
kidding.
or distilled. And I just want to say that I think we need to be a little cautious about the outlook out there.
Right, understood. As we got in the jobless claims and we're seeing the labor picture pretty strong, how do you think that sizes up and sets us up for next week's monthly jobs report?
Well, I think the outlook remains, Nicole, that we should still see some moderation in the job market after a red hot showing through 2022, averaging monthly job gains of 375,000. That's quite remarkable. I think we know that the major constraint for the job market continues to be labor supply, meaning just not enough eligible workers to fill those gaps with respect to the large number of job openings that persist. Now, if we continue to get these job cuts and job cut announcements, that will be some labor supply that becomes
2.3?
available. But not all those job cuts are going to be people who possess the skills that are needed for, let's say, the broad array of job openings that are out there.
There you
So
go.
I think at least in the near
Crazy.
term, we think the job market remains
Big bump.
relatively robust, but we do expect some moderation or weakening, and probably over the long term here, over the course of the year, we would expect to see the unemployment rate rise, not skyrocket, but continue to rise from the recently matching historically low levels.
Yeah, and what is your takeaway from the GDP print in particular?
Well, I think, first of all, we had a better closing act in the sense of the last quarter of 2022 than many would have expected, to the earlier point that, it was a pretty sometimes violent argument in the early half of the year about whether a recession had begun then, which I didn't believe, and I think that was the consensus. But let's remember that in the final 2 months of last year, retail sales fell 1% and more. We saw industrial production decline in December. We're seeing those negative readings with the Institute for Supply Management, which are in contraction territory for both services and manufacturing. So, you had some okay momentum in the early part of Q4, but really some weakening and deterioration in the final month of the year, and that's really setting us up for where we are right now.
Right, understood. And so as we take a look at even durable goods, were you surprised to see, look, people are still ordering things? I mean, you almost expected it to be the other way, right?
Yeah, and as you know, Nicole, you really have to be prepared for volatility in that number when it can be driven so strongly by transportation orders, and in this case, commercial jet aircraft. And so there is not a bullish outlook with respect to, broadly speaking, business investment here in the near term. There's not a bullish outlook in the near term for consumer spending. And those are the things that are ultimately going to be more important, I think, for the macro outlook. And, we can hope that the economy will remain more resilient in the near term, but it's going to be a situation where there's going to be basically, threading a needle here with avoiding the technical definition of a recession. Maybe we could have 1 quarter only of contraction if things work out well. That's not the best case scenario, but it's absolutely not the worst either. So, we're in a period of some uncertainty, and that's why you have the likes of Jamie Dimon saying, let's prepare for all eventualities within reason and understand that uncertainty is maybe the watchword of the day.
Just quickly, yesterday I had a great conversation. We were looking at a poll looking at folks going shopping, and it said 2/3 of the folks actually planned on spending the same or more this year while they're shopping, most of which actually expected to go to the stores, but they expected to be very diligent in how they spent. So it was really a testament to names like Dollar Tree and Dollar General and things like that. What do you make of the consumer and how they'll be spending this year? I mean, aren't they afraid of a recession, of layoffs, and the high interest rates on their credit cards?
Absolutely. And, our most recent bank rate survey finds that a falling number of individuals can afford a $1,000 or more emergency expense from savings. Only 43% can pay that. One in four are putting emergency expenses on credit cards at a time when credit card interest rate is high. We know that the personal savings rate has really basically fallen to too close to zero here. So there's not much gas left in the tank. Maybe now, with inflation falling, wage gains will begin to help make up some of that lost ground, but that's still a process in motion. So
X-ray,
cautious on the
I'm not showing a listing date till tomorrow on Bullfrog.
Sure, it makes sense. Good to see you, Mark Hamrick. Thank you.
See right here, I don't know what platform you use, but here's Bullfrog holding. The deadline is 126, but the listing date's not till tomorrow. I don't think this comes out till tomorrow because I can still get shares of it. I don't know if you're still waiting around for that, but
Camco and Southwest Airlines next on Trading 360.
well, they found enough shares to borrow. Yeah, it's all fugazi. Fugazi. No stress, ready to dump. I don't know. Did you well, I don't think it doesn't look like it's going live until tomorrow, so are you waiting till tomorrow? Because we've got a whole nother trading day. I'm gonna go live till Friday. Distress levels in European real estate are at the highest in a decade, in part because of a decline in liquidity, says Bloomberg. Buy a happy stock? Like Party City? Parties are happy. Look at this gap on GME. The volume just shut off. Am I going disc golfing? I didn't plan on it. Sorry, X-ray. Spies moving back up here. See what happens at VWAP. We did have this engulfing candle, and this is a support from yesterday, so essentially this is the bottom for today. Hanging chains. Nice, man. Rolfing, that's fun. It's fun to frolf. Another divergence on the hourly RSI there for SPY. Actually, if today closes low enough, this will be a divergence as well. Good for the dog, that's true. Yeah, I played it. I've disc golfed some though. not like that competitively at all, but done some. It is a fun sport. Fun being out, especially if it's a cool course. And it's not one where you lose a lot of discs. I like pretty easy courses. Not too much water to lose stuff in.
People like me to pay. So Lyft is 65% off its 2022 high, whereas Uber's only 30% off. So it's got a little bit of catching up to do. We also see some bullish divergence, meaning it made new lows.
So you're the
but not new
the
highs,
froth
implied
player that
volatility, and you're also seeing leverage
has their
buying.
dog
So
pooping
the
all over the
technicals
course.
are setting up here, trading between 10 and 15 here for 4 months, and 10 and 20 now with a gap up to 30 above 22. So there's a lot of positives here on this chart. The way I'm looking to play was in the money option, as we talk about here, looking at the July option. It's got 6 months of time, and we're looking at that particular play to obviously to gain in value as this stock moves up with this bullish divergence bottom.
What do you like? BYD?
Okay, so there it is, buying a call. Ben,
Bullish
what do you
divergence bottom is he talking about?
I think this is a stock that's been rallying on the short term. On the longer term, it's been in a bit of a downtrend, but there might be some room to the upside for Allen. We'll get a look at the daily in just a second. First and foremost, though, well-defined trend higher here. You're looking at the move we've seen from $10 up to $16.30 recently. This is off the December lows and to the highs this week. Bottom left corner to top right. And look at this. Again, a perfect example of that two phases that we're looking for, right? You get the horizontal phase around 10:20, a break to the upside. And again, nothing major here. We're talking about small moves up, but incremental moves up, right? Nice. And no retracement, no indication that the working assumption that we're forming value at higher and higher levels has been invalidated at this point.
Point out that RSI divergence?
I can see how well, as you look at it, we're kind of a little bit more range bound recently than we had been, right? We've got an upper extreme 1630, a lower extreme 1460 to keep an eye on. Moving away from the hourly candles into the, those were actually 15-minute, into the daily time frame. You can see this is the move we just looked at from 10 to 16.
Widely
a small
over the others.
Blip on the radar of the bigger picture here in terms of that trend to the downside we've seen since we're going all the way back to, we're talking 2021. We were up around $68. And look at what we've seen in terms of the move off that spring high there on the left corner of your screen. Now, all the way down to, again, that low we just mentioned, down around $10. And here's what I was mentioning before. You've got 4 well-defined areas of consolidation that have formed. So we're trending lower, right, on the daily time frame. That move we just looked at, somewhat counter trend. But if we get some momentum through the middle of this range, we could open up a door for a retest of the upper extreme. That would coincide with 25. Here's the gap that Alan mentioned, below 30 to that upper extreme 25. So that's a key level. Quick check where things stand in terms of the 50-day, the 200-day. We're above the 50. Look where we are. We're testing the 200-day moving average right now as we speak. RSI expanding to the upside, so supportive of the move up here. It's got legs, to say the least.
Right, understood. So, and it's interesting how you picked this one. I mean, did you look at Uber too, Alan, when you picked the Lyft trade?
50%? Wow.
I knew that Uber had already recovered some, and like I said, this was a Peter type trade, meaning the fact that trade what you know, and I've been noticing that these Uber prices
Well, I hope you bought more than one disc.
Because they've kind of got us like they did with cash machines back in the 90s, that we're comfortable, you know, paying a little bit more each and every time. And the Uber is no longer a real good value, but they're making more money for the drivers and for the company, obviously. The option I'm looking at here is a 12.5 call for July. It's trading about $475. So that gives 6 months of time, and it's only $75 more expensive than the April option. So you're getting twice as much time in the money, deep in the money option, $12.50. And if we fill that gap at 22, then this option doubles in value. So it's taking Peter Lynch to a different level.
Right, understood. Okay, next one, Kemco. CCJ. It's trading around $26.98 today. Tell us about your trade, Alan.
Well, again, this is a stock that's been sideways here between 20 and 25 for 3 months. A breakout of that range, which has now happened, targets 30, and it's been between 20 and 30 for 1 year. So this is 15% off its 2022 top, but it's also 400% off its COVID bottom. So there's a lot of momentum here in the big picture. I'm looking at the June 23 call, trading for about $575, again, 5 months of time, an 80 delta here, and looking to see how it can react if it can get to the top end of this range at 30 and then make a move.
Right, understood. Here it is. We're buying a call, this bullish move. Your thoughts, Ben, when you take a look at this one?
Nice move up, Nicole, from 21 to 28. We're talking from December to current levels. But Alan mentioned we're breaking out of a bit of a range we've been in for the last 3 months, up and through 25. But still a lot of heavy lifting for the bulls to do. I'll show you what I mean in the bigger picture when we look at the daily. But first and foremost, you see a very strong
GME.
move up here. Again, I'm talking about, as mentioned, from 21, talking off that December low to, well, near 28 this week. You can see higher highs, higher lows, bottom left, top right corner type price activity. And you can also see these well-defined areas of price development, right? You have the horizontal development around 22, vertical, horizontal, vertical. We're talking wash, rinse, repeat is what the bulls are looking for, continuation of this. But I want to point out, if you're looking at price activity through this lens, it's important to remember that we spend most of the time in that horizontal kind of overlapping consolidation phase, little time in the vertical phase, but that's the imbalance phase, right? The vertical horizontal value phase is the balance phase. Taking a look here as we pull up the daily time frame, you can see this move we just looked at. There's
next Friday. I didn't get a lot of time.
Longer term trend up, but here's why I said some heavy lifting still to do, up around
but
30, 32. But I did want to take a look here at.
It's possible we just kind of consolidate in this range, and they don't do
trend
much. But I think we could probably get some
even
downside
on the daily,
at least.
You can see these two phases, 11,
if you're on a
13,
range
these
like here.
stopping points at 18, where we kind of regain composure and establish value.
Yeah.
Currently forming one around 26 right now. And you can see even how, well, we've lost some of that momentum to the upside. And this is that wider
Could get
range
another
I'm talking
week.
about. Alan mentioned the break above 25 to this week. Here you can see 32.50 to 18.
Next week I might just close and get another week
on
like Monday or
everything
Tuesday.
within that very wide range, and there's
play these for the
opportunity
next
to be
couple
had,
days.
but not a lot of conviction. A breakout above kind of resumes the trend we've been seeing to the upside here. Taking a look
It's
at
a
where
double
things
for me
stand,
because I also
above
get margin
the
when I do
200,
it.
above
So
the 50,
I need to get
with
puts for next week
conviction.
anyways.
I want to point that out.
Usually I would
RSI
get him
supportive
way
of
out the
move up
money
here, so
because I don't need
this
the
one's
margin
had
of
some
close to the
nice,
money.
run
But
up
if I think
here
it's going
as
to go down,
well,
might as well
but
just get him
look
close
here,
to the
we are
money
kind of in the
and
middle
make
of the
money with
range
it.
right
And
now.
then
Continuation of this pattern
if they go up and they
support
want
the
to sell them,
retest
I
of
can
that
get
upper extreme.
more puts further out of the money.
30-32 is the area the bulls want to get up above here now.
Yeah, and the bulls get excited when they say, "Oh, look, we broke out past
Base
those
wise, even
moving
rallying
averages.
SPY
We
flash
can
crashes.
retest that upper extreme there in that chart. That's a great chart, Ben. Thank you for that, Alan.
I know what you mean,
final
Tim.
Thoughts on that one before we get
Yeah.
to Southwest Airlines?
Crazy.
Well, I'm just positive on miners and metals, and I think the dollar continuing to decline.
I opened up
the big news that we
long
talk about
VIX
every
futures
single day are
and
interest rates.
a long
We're
ES.
looking at 5% rates here in the futures markets.
They've actually changed a
all
lot.
the way out
This
till
was like
December,
1300
so
positive
we're
on the ES
done
and
as far as
75
the futures markets go. We found
or 100
that-
negative on the
that
VIX.
end,
So yeah, they're not.
destination. But then you
VIX has
can
been,
see a possible cut
like,
in December.
they've been under like
Possible cut
lawsuit
rates
for
in
fraud,
December,
so it's
and then
not.
2024 we're back down to 3.5%.
I don't know what's going on there, but it's
2025
not.
we're back down to 3%.
It's fake.
So that's all positive for commodities and any dollar-based assets.
Right. Okay. And last but not least, Southwest Airlines.
Yeah, I think
What
we're.
a set of
It seems to me
headlines
like
we've
if we
had
are
from this company over
repeating
the
a
last
historical
few
pattern,
months.
we're going to
What
consolidate
are your thoughts now?
and come down.
Well, it's sometimes
probably
equally as important
possibly
what
retest that
doesn't
low or
happen
make a
as
new
opposed
low.
to what does happen. So if you look at this chart, This
So
made
if we are
new lows
repeating
in
a pattern,
October. All right, we
we're-
made bullish divergence lows.
we're right about here.
But we never retested those lows with all of the catastrophe that happened with the airline in December. So technically, if you look
So
at
this new
chart,
low
it
would
has a
be
very
like
positive
$13,
reaction. We've been
but
trading between
might
30
even
and
be all the way
40
down
for
to 10.
6 months.
But as far as
Now,
percentage from here to
Southwest has pulled
here,
back a little bit
that
here
same
today. It's
percent
hanging
from
around
our
this 35
15
level.
would put us
Now,
at 13.
Southwest is down about 30% from its from its
So, like,
highs of
from
last
here,
year,
15,
whereas Jets,
that
the
new low would be
ETF
like
that
13.
follows airlines, is only down
Well, it's like somewhere around
15%.
here.
So there's more upside here, and it's also 45% off its 2017 highs as well. So again, the play here is a June 30 call, the range between 30 and 40
Rum, has
for
it been
6 months.
volatile?
It's above its 200-day moving average. I'm comfortable being long from 30. That option's about 650. The break even
Oh, yeah,
is
that's a
$1
nice-
above
nice
because the
smooth
volatility
chart.
is relatively low. And if we just get to the top end of that range, that 40, which is a long ways away from the highs, then that option gains about 70%.
Right. Okay. So what do you think about this bullish call here, Ben?
Alan, you're dialed in on that 33, 32 area. I think that's important. Keep in mind, that was the December 2021 low. So the retest of that in October, and that's where I want to begin.
Oh, you do that also, John, for margin?
Inability to get lower or see
Crazy.
follow through below that level. And we'll look at the daily. I'll show you there's a
Well, yeah, I
couple
was, like,
key areas
noticing
of support down there. But first
those are my only plays that were
well-defined
green on
trend environment
GME.
here, much like
I
the other
should
two
maybe
stocks we already looked
get
at.
these closer to the
Bottom
money
left
and
corner to top right corner, and
actually
no
try and sell some.
absence of very well-defined areas of consolidation. Now, this area got a little gray. This is more of a channel to the upside. I didn't want to get too granular and start kind of picking
Nice.
away here at some of these smaller areas of consolidation, but just kind of taking out the fat crayon. You can see 38, 40, 43, 48, and never really retracing at any point, right, to the
But that being
significant
said, I mean, we could get-
areas, the middle of the
could still
prior
get over
area
it today.
that formed relative to the current one that you're in. And you
Late
can
day
see
rip.
we're
If we did, I think it
forming
would
an area right
continue
around this
through next week.
57 level. Now, let's take a step back here and just take a look at the daily time frame.
So
Here's
then I
the
would
low that
wanna
Alan
flip those
mentioned,
puts
right
to
around
calls,
this 30 area.
or just close them and get
how it was
shares.
a spike to the downside, taking out a multi-month lows, but limited in terms
No
of
margin.
follow-through.
Yep,
And then look
that's
how
right.
that coincides with, as I mentioned, the December low from 2021 and off last fall's low. This is the move
Oh,
we
that
just
free
looked
trace
at.
before the rip, I
Gets
know
us
we did.
back to,
What?
well, we're talking levels we haven't seen since the spring, May of 2021. And I did want to point out here, as you look at the weekly time frame, look at this.
Oh, if I
You've
call
got
that
an
right?
attempt here now to break
Yeah, I mean,
above a
I'm so
long-term
confused.
trend line that goes all the way back to 2007, 2008. We're up around 150. This is the first bidder
But yeah, I
attempt
mean,
to get above that level.
chart,
Nicole's
like,
going to give something to watch in the coming
this is the
days
most
and the coming
similar
weeks.
pattern.
If we get follow through here,
This double top,
wanted
this
to take
double
a look
top,
at
and then this move down.
ripping above the 50-day moving average, rip above the 200-day moving
then even in
average.
the time frame.
RSI supportive of this move up here.
Time frame too. This is longer though, which is strange. I was hoping this bottom was going to look different than this bottom. I was hoping we were more like here and we'd start this rip already. So, but I guess technically because of the MLK, maybe it's deferred and we will start it today. But if not, it might be earlier on and have this second leg down, which would at least be a retest of that. I think this area of the low, and if it makes a new low like it did there, it's like 12.5 or so. But I always saw 10 as the support. With that said, this 15.4, I never saw that. That just came out of nowhere. Well, maybe it would be like a 12.5 or 13. Could be EXPI. You talking about Express? Avia. It's probably good I got all those puts actually, because I'm gonna need margin if I'm gonna just ride this short ES. In case this doesn't start dropping until next week. Express World holding. Hey Saleh. what could be EXPI? Not a bad chart either. EXP is always green and sometimes red. So it's like basically the opposite of GME. Always red, sometimes green. Dude, the IV on those is only 85? Oh, wow. What the heck? It's GME? This is when I was gonna go long. Dang it, what's going on? How's the IV already down to 88%? Yeah, this was this. Excuse me. These options were like over 100% yesterday, and even today. Those decayed so fast. Hmm. Yeah, I might not be holding those puts very long. Is that right? Yeah. Yeah, it might be a good time to go long. Even yeah, early next. If with that IV that low already, might just be like a 1 or 2 day dip tomorrow before a rip. This is the 20.5 for next Friday call. Yeah, look at that. Look at that, not even, it's just pretty flat. All the theta has, huh. Yeah, it gets to a point where it's too cheap not to buy. Where you're not gonna lose, like the theta's gonna go down, but it's not gonna be dramatic. That's when you gotta go long. Global real estate brokerage company. Bird breakout? Oh yeah, you were talking about this. Someone was the other day. The IV on these leaps, still 91%, but double digits. Yeah, the put side. Look how low the IV is on the put side. I just noticed it when I opened up that option. I'm like at 85%.
And seeing what China can do for this company. Obviously, you've seen the restrictions eased. And a lot of people are excited about that. We think a lot of this is priced in, though, in the stock already.
I see. So without a lot of exposure here in the U.S., I mean, how would you compare it to its peers that do have that exposure to Las Vegas here in Nevada?
Yeah, so we like MGM better than Las Vegas Sands, just for the fact that it's got a strong U.S. operations.
Yeah, me
It's got
too.
regional
Dump
U.S.
LVS.
operations, and obviously on the Strip in Las Vegas. But they do have some exposure to China. We don't like to be too reliant on China just because of how their government has handled COVID, and you never know when they might lock down again. So we don't like companies that have significant exposure to China like Las Vegas Sands does. We like companies that are a little more diversified.
And does MGM, you said you like it better. Does that
Oh,
mean
that's
it's
the
not a hold,
bullishness on
it's a
LVS. I didn't realize it
buy?
was so China
Yeah, we have a buy
focused.
on MGM. It's outperformed since the pandemic, and it's just we
China
like
reopening.
the diversification. They do have Macau operations, so they'll benefit from that reopening in China too. So we just like their cash flows; they're better.
And ultimately, I mean, we expect China to improve. I mean, you've seen some pretty bad numbers, right? I mean, what are the expectations going forward as COVID lockdowns are easing?
Yeah, exactly. So, last year, Macau visitation was 20% of 2019 levels, which is pretty absurd and unheard of. So, we think that's kind of the bottom, the floor for Macau. So, we see plenty of upside. We think this year, visitation might return to 60 to 80% of 2019 levels. And that's kind of what we're looking at in our estimates.
Right, understood. How do you think the consumer's feeling as they are getting out there and trying to spend and bet and put their money on the line?
Yeah, I mean, I think it's going to kind of follow how the U.S. Reopened in 2021 and 2022.
Let me wait for a break here. I'll
obviously,
go over it.
The pent-up demand is there. They've been, locked down, and they were locked down longer than we were
It's not
in the U.S. So,
anything
we
crazy,
think they'll come back strong and they'll spend in China. We just aren't sure how people will handle, the rise in COVID cases there. So we think it'll be a little bit of a bumpy road to a full recovery there, but we do see a full recovery within 2 to 3 years.
Yeah. And then some of the other names, gaming and leisure, got an upgrade recently by some of the other places. I was interested in something like that, or Penn National Gaming, or anything else that you can give us so we can sink our teeth into that as well.
Yeah, so we really don't like a lot of casino operators right now. A lot of their balance sheets have been hurt since the pandemic began. The only other buy we have in the casino space is DraftKings. We think DraftKings has the best technology for mobile gaming and sports books, and they have a significant chunk of market share. They're the second leading player behind FanDuel's. In the U.S. So we think there's upside there as more states reopen and legalize online sports betting.
Yeah, I just wrote that down. That's actually great information and very useful. Zach Waring, thank you. Great to have you on the show. Really appreciate it. Zach Waring, equity analyst at CFRA. Good luck there at Las Vegas Sands and some of the other names. Thanks. Coming up next, George Still is standing by. Take a look at Seagate Technology. Now the chip maker
they're never gonna say anything. Weed. No, just the IV. So the IV on the options, once they get down to the 80s, it usually doesn't get much cheaper than that. Like for weeklies at the money. So these are next Fridays, and these are in the 80s. Like it could get into the 70s or a little lower in the 80s, but that's usually signifying a bottom in pricing on the options and most likely on the stock as well. So, yeah, that makes me more bullish. Makes me think we could pop sooner rather than later. I'm not sure if it'll be this week or next week or when, but yeah, just noticing that IV because it seemed like just yesterday it was like 115. Seemed higher. On E-Trade, tell me the current IV is 93.5%. Yeah, actually, that's it right there. So yeah, maybe we'll get calls. If we're just playing the IV, then yeah, because like 52-week IV, the range is 96.95% up to 136%, right? And the current IV is 93, so it's at the very bottom of the 52-week IV range. I don't know what IV rank or anything means, but I mean, the IV on the puts is also really cheap. So, but I'm usually just looking at the calls. Might, yeah, I think probably wait till next week, maybe Monday, and just screw the chart and the patterns and all that, because who knows? Just play the IV. I asked Just Oppose or whatever in Discord if he thought about it. He's played the IV on GME. I've wanted to, but I just like kind of forgot. Yeah, Morgan Stanley CEO, or no, yeah, James Gorman. Oh, wait. Morgan Stanley paid Chief Executive James Gorman $31.5 million for his work in 2022, a 10% pay cut from the year before. Ouch. Pelosi has let her Roblox call options expire with a total loss of 303,000. Nobody diamond hands into expiration date better than Pelosi. United Airlines says hired about 2,400 pilots in 2022 and plan to hire another 2,500 this year. Bullish in the skies. Twitter says aware of issues with the search endpoints in Twitter API and are investigating the issues. Tesla, Mexico yet to reach deal on new Gigafactory. Come on, Ace, get him on that Tesla plant. 22% of Canadians say they're completely out of money as inflation bites. 5 bouncing up here to VWAP. Hmm. 6 a.m. in here. Just go to sleep with the sunrise. Good night, X-Ray. Thanks for hanging out, man. That's true. GNS and HLBZ got us through. Good thing I didn't start buying into that yet. Yeah, talk to Amlo about that. Verb still going? Yeah, someone else. Was that you mentioned the first time the other day? I think this day or this day. Yeah, broke that resistance. See what happens when it gets at 2190. Then after there, oh, it's a little bit, a couple more. 23. I say it's just a gap fill, but not necessarily. Eatable. Eatable. Edible garden. Good ticker, man. It's good. I see an RSI divergence there. It's on the hourly though. Yeah, longer time frame looks nice. Just had a reverse split today. I mean, you could see a big sell-off from this. Could see a rally. This is sketchy. I mean, this trend all looks nice, of course. Reverse splits oftentimes cause dumps, but we've been seeing them cause rallies, but not necessarily the same day. More recently, it's been like tons of volatility to the downside potentially, and then maybe a later rally. A lot of volume. Yeah, it depends on your outlook. I mean, how long are you willing to hold it? There's a 300,000 float. Oh yeah, was it the buzz, the VW buzz? OGL for puts. Micro algo. Even have options? You know, sometimes tree to leaf, you seem like you make me feel like I'm chatting with a bot. And then you go and do something like that, and then I'm certain of it. I don't know what I'm saying. Such a thing a computer would say. Donra, are you on stream? Need some insight into this IV. Yeah, you'd have to short the shares in that one. It might be hard to even short shares on that thing. AVYA breaking out new highs. Got a 50-cent resistance up there. Thanks, guys. 35 likes. Appreciate it. All right, Jess. Wow, looks like it's rejecting VWAP a bit. VWAP. What Nicole saying.
Equity analyst at Morningstar, and Kim Forrest, founder, chief investment officer at Boca Capital Partners. Thank you both for being with me. So it's interesting because it was somewhat of a mixed bag. We got some news from IBM and
what are you talking about, Tree?
But there are concerns enough to push this stock to the downside today. So Kim, I'll start with you. Your thoughts?
Sure. I thought they did pretty well, especially in light of more PC-heavy companies that had shown a steep decline, especially in consumer. And that is absolutely not IBM, right? They are 100% business. and 100% of the 2,000 largest firms in the world.
SPY kind of
So the good
just
news is
subtly
those
inversing here.
businesses are still
Or GME
buying
is.
stuff from IBM, although in smaller amounts it seems, but it is steady. And Red Hat was a good
I'm ready to dump these
report
puts
for
and
the
jump on shares.
company as well.
I did not realize that IV came that low
And
already.
Julie, as we looked at what went on with the margin expansion, you saw some encouraging things, but weaker cash flow is a concern. That's something. The foreign exchange was the headwinds have, I guess, pulled back a little bit for foreign exchange.
Yeah,
But what's on your mind here going forward? The cash flow?
Yeah, I think,
You've
they
never asked
posted
for
nice
suggestions?
results with their beat, and we especially liked
I've never asked
that they
you
were
for
able
suggestions on
to
stocks.
undergo some price increases
I guess I'm
on
not looking for
their
a trade.
on the consulting side of their business because
Yeah,
they've
try
had
to trade
to
less.
absorb some
Trade less, more
inflationary
profits.
costs over the past year. But you're exactly right. I think on our mind for the upcoming year is
Tons of ways to lose money out there.
underwhelming free cash flow estimate that they did give around 10.5 billion. But we do think that the stock overall is approaching our fair value estimate as we do assign a $126
The
fair
bullish
value estimate for
trifecta of
the
stock market indicators is flashing, and it suggested 20% rallies on the horizon.
A little bit weaker than expected.
That's the kind of little short squeeze stuff I'm
see that they did
afraid
have
of.
sales increases. Kim, was that reassuring to you? I mean, I'm seeing a lot of trimming and
20%
even
is
some sell
insane, though.
ratings. It's just not enough.
20? Oh,
Well,
get out of here.
that's just it. I think
What
what
the
the
heck?
comforting thing here is that the company isn't
New
melting,
all-time highs?
right? They're not
Yeah.
super
Go get Kyoto.
downbeat on further guidance. But
Kyoto
whenever
wrote
we
that.
return to growth, and tech companies do well in growth, I'm not so sure that IBM is going to be able to grow
Nice tip.
appropriately. Their customers are extremely reliant
Only
on
trade
this
the best
technology,
setup's
have
going to
it
be
budgeted,
spicky,
but they don't have new exciting stuff
picky,
in the mix.
spoiled
And
brat
any
with your
acquisition
trades.
isn't going to be big enough to drive this company, although God knows they try with the acquisitions. So this is a steady Eddie sort of company, and that's what you're getting. You're not getting a true tech company that's going to go up whenever
Steady
the
Eddie.
economy goes up and kind of come back down when the economy gets soft.
And with IBM, we're seeing close to 4,000 layoffs announced. What did you make of that, Julie? And what makes this and the tech layoffs maybe different than other tech layoffs, if at all?
Yeah, I can definitely cover that. So while we think that the stock is approaching our fair value estimate and going the right direction, we do think that there was a bit of a misunderstanding in the market with the news of the layoffs yesterday. So
I didn't take it as bullish as you wanted.
They're expecting job cuts around 4,000, which is about 1.5%.
All other layoffs have been bullish for companies.
This is largely isolated to their Kyndryl and Watson Health businesses, which were already divested from IBM. So you can think of these layoffs as something that were likely going to happen no matter what the
SPY's rejected VWAP.
economic
GME,
environment was looking like.
just no volume,
this is
but
pretty different from the
could
rest
explode
of
at
the
any
layoffs
moment.
we're seeing in the tech landscape, which are more harbingers of economic
I
weakness
hope so too,
to
Tree.
come.
Right. And what's your outlook for growth overall, Kim? Sounds like you're fairly positive on IBM today. You did mention Red Hat. What's the big picture? What are some of the
up here
names
too
in the
today,
group
huh?
in the tech world that you're a little more hot on?
Sure. Well, I don't think, the best thing I could say about IBM is they are going to grow, and they're going to grow slowly, and they're going to do it through their consulting business, which drives the rest of the business. So you look at that, they had nice gains in that, about 17% increase year over year. Even with pricing gains, I'll take it. That says that people are going to continue to buy and continue to invest and build out their IBM investment. So what do I like better? You know me, I love the semiconductor area, and it goes up and down, but we've been down for about a year now, and it may be a good time to add to your positions. They have increased this year so far, but
Look at that.
pullback pullbacks are inevitable.
Right, consolidation
I would
range on
always keep an eye
SPY.
out for my favorites, AMD and Intel. And
Today's candle's red. I'm
Micron as
hopeful
well.
for
AMD,
breaking the Friday
Intel,
green streak.
Micron, I wrote them all down. Julie, final thoughts. Big picture, any other names that you're watching
She's
closely
a
as winners
semiconductor
or
kind of
to
gal.
avoid, names to avoid?
Yeah, for winners that we really like right now,
Loves
qualitatively and
batteries.
quantitatively, both
See, I knew you knew
Intuit
Twinder. You
and
know which way to
Workday shares
swipe.
look very attractive
Well,
to
are you spending
us,
$500 a
and
month
they're
on that
both
subscription?
wide moat names that really benefit from significant switching costs. So for Intuit, we have a $503 fair value estimate and Workday $229. So for long-term investors, we think
Oh,
these are
and SPY is
great
not.
ways to
It's
go.
coming back up.
Wonderful to see you both. Julie Bouchal Sharma, Kim Forrest. Thank you both. Great to see you. Thanks. Good luck there at IBM and some of the other names.
All right, SPY.
That's going to do it for us.
About to
here
break
on
VWAP here.
Trading 360. I'm Nicole.
See it. So what you got? Nothing. A bullish trifecta. Hmm. It's breaking VWAP. Let's see. Buy more, Bobby. Yeah. Next 5-minute candles opening above VWAP. Hmm. The life of produce? You shred with steel? What? I'm considering flipping my short to long, actually. Or maybe just getting out of it, but Damn, it's just like right at that tipping point to where if it does rally, it's gonna go crazy. Hmm. I did it. I can't believe I did it. No, I'm not sure I want to do that. Next lesson. Kill losses quickly. Kill losses quickly. Shredded lettuce lasts longer. The blades don't get dull ever. What are you cutting them with if it's not steel? Like ceramic? That's an interesting thought. I've never known that. Chipotle seeks to hire 1,500 or 15,000 restaurant workers. Hmm. I wasn't planning on closing that, but yeah. It broke my spot here. I should have closed it there. Cutting losers quickly. Would have been this candle where it really broke. I've been whipsawing the trading. This day I was trying to trade the breakout and it was just range bound. And this day I was trying to trade the range and it was a breakout. Get around. You get around with that steel news. More BuzzFeed news. Up 47%. They use ChatGPT to help come up with content. I don't know if they have earnings. I don't know why. Is this all from that? Oh, meta news. So I actually cut it. There might be some upside here, but I might wait for more obvious sign of a reversal to the downside and just go short. I don't think the upside is great, unless I guess if we break this 408, then yeah, we might be on a tear. But to play it from here to 408 and yeah, and with the data today was pretty bearish, so might not see the reaction from that till tomorrow. But this green Friday curse or blessing. Right. Oh yeah, she's easy to look at. That's true. Are you talking about him? Swipe right on him? GME's volume just shut off. All right, SPY's moving up here. There is this divergence on the hourly, which is bearish, but I don't hold the hourlies very, very heavy. If today hits 408, I'll take a short up there. How about that? Deal. If we hit 408, I'm taking a short. Jeez, that'd be scary. But yes. GME is moving up through VWAP. Yeah, the IV on GME is interesting. It's pretty low.
Like I said, they're not necessarily trying to put the U.S. economy into a recession. So I think as long as inflation
shut off volume, breaking
continues
VWAP.
to come down, that's likely going to lead to the Fed's remained hawkish, but they've really slowed down their aggressiveness and basically acknowledged, okay, we know we did 425 basis points last year. Looks like a 100% chance that we're going to get 25 basis points next week. Maybe we get one more, but
yeah, big thick lines,
I
great
think
idea.
they are also still waiting to kind of assess the environment to see what happens. So I guess, Tom, to answer your question, does it put 50 on the table? You know, I don't think so. I don't think there was anything that was that aggressive that you could really suggest that it would change those probability figures in that manner. We'll see what PCE is tomorrow. And I think we just we have to continue to allow time for these 425 basis points to kind of marinate in the economy.
So Kev, with Nathan, stating that it's almost like everybody's waiting for that lag effect from the 75 basis point hikes that they did repeatedly.
Forgot about PCE.
And if you look at the bond market, it's already expecting a bigger recession than what the Fed doesn't even, most of the presidents don't think there's going to be a recession, to Nathan's point here. And they've come out there and stated that, and they said if there is one, it'll be soft.
Right.
But the bond market's telling you something different, that the economy's going to get real bad here by the end of the year, and there might be a rate cut. But if you look at data, I mean, it basically says, why take your foot off the pedal now? We haven't done the job, and it's not coming through in some of their mandates.
Well, we live in a microwave world, Tom, and sometimes you got to let it bake, right? And I think that's what Jerome Powell's doing. He's tapering into a level that he considers restrictive, then he's just going to let it work. Let the medicine fix the patient. So I think that's what he's doing. I think that's what he's setting up. Right. But he'll change if the data changes. But yeah, I think this is an economy or a market struggling or frustrated by they want everything to be fixed quicker than it's actually happening.
Yeah, and like I mentioned, those lag effects take hold, and I think that's the concern that a lot of people are saying, stop hiking right now because we haven't felt the full effect of what you've done over the past 12 months here as far as interest rates go. But Nathan, if you look at, you mentioned earnings, kind of mixed right now, sector by sector and even stock by stock at this point. IBM lagging today, Tesla doing well, MasterCard lagging a little bit, showing maybe a little bit softness in the consumer. But what's your takeaway from some of these reports?
Yeah, it is interesting. Let's go to Microsoft first. I mean, basically the stock was up, the implied move after, they showed that their Azure growth was 38% on a constant currency basis. Their guidance was for 37. Investors were, hey, we were kind of expecting, is tech going to fall out of bed here? And then they came out with their guidance, but guys, you look at the guidance, and for their intelligent cloud segment revenue, they forecasted 21.7 to 22 billion. The consensus estimate was 21.14 billion, and they take the stock down on that. Yeah, I get it, because you want to get ahead of the potential deceleration in growth, but it's not by any means atrocious. So we really haven't seen. Look at Tesla's report as well. That wasn't that bad either. So we're not really seeing some of those companies that are at least within tech. I was concerned with tech. I know we got some big names that are still coming out. So we'll take it data point by data point. But if you look at the earnings scorecard so far, so 127 companies out of the 500 for the S&P reported have reported so far. 49% have beat on the top line. That would be the lowest number from going back before the pandemic in terms of the beat rate. And then 71% have beat so far on the bottom line, the EPS side. It's trending on the lower quartile of, if you look over the past couple of years in terms of the beat rate, but it's not necessarily atrocious. And then you look at some of the specific reports. Let's take United Rentals, for example. Guys, that stock, they're trading at an all-time high. They come out, their guidance, the revenue guidance is, talk about a cyclical company, right? I mean, United Rentals, they do equipment rental. They come out, their stock's trading at an all-time high. They announced they reinitiated dividend, and they announced that they intend to do a $1 billion share purchase reprogram at all-time highs. And I'm kind of like, okay, what's recessionary about that? But then you can flip over to something like Sherwin-Williams, whose guidance was definitely below estimates. I know that's in the housing play arena there, and they're expecting, they're calling it a very challenging 2023. And so what is an investor or a trader to do? Well, you're going to have to go company by company, sector by sector. if you look at the technicals, we're right up against basically resistance levels, that being the 4,100 on the S&P. Yes, we're above the 200 SMA. Okay, cheers to the bulls for that. But 4,100 on the S&P, 1,900 on the Russell 2000, and then 11,500 on the NASDAQ, which coincides with the 200 SMA. Let's keep in mind that sideways might be a trend here for the coming months, and that we might be dealing with a lot of this chop. Why aren't markets taking off when you get something like a GD report or better than feared earnings scorecard that's coming through? And I think the answer is valuation. So, hey, I'm a derivatives guy. When you look at an environment like this and you expect perhaps we get a sideways choppy market and you recognize that is a trend, maybe it's an environment to sell some out of the money calls if that's your belief.
VIX below 19.
Yeah, VIX below 19. The uncertainty index there, reflective that, hey, maybe some consolidation is needed here, but I definitely think we have some market-moving quarterly results, and along with that earnings, Nathan mentioned the PCE that's due tomorrow. The Fed highly watches that data point. All right, guys, let's take a quick break here. And when we come back, we're going to take a look at Chevron, which announced that massive share buyback and a hike in the dividend ahead of their earnings tomorrow morning. Fast Markets coming right back.
Yeah, I mean, I think the price has already been hit from it, but it could have continuation of 4.5%. Big diamond. Look at that long-term diamond. Wow, it's long-term. Yeah, it's kind of right at that resistance. A break of that would be very bullish. Yeah, that'd be all-time highs. Earnings are tomorrow. Pre-market. Doing an earnings play on it. Efforts up. The bull move, Cotton. The bold strategy, Cotton. Let's see how it plays out for him. I have participated in a stock when it splits. BBBY feeling the red candle from the SPY. Pretty big dump there. Yeah, it doesn't change anything with the value. It just changes the amount of shares you have.
And trying to get ahead of the earnings event tomorrow morning, George, announcing that $75 billion share buyback. Stocks just below all-time highs, having a nice day today. What do you think?
Well, I think, the announcement is a little bit unusual, but not necessarily unheard of because they're going to be reporting earnings tomorrow. I mean, it's pretty impressive share buyback, $75 billion, which exceeds the $25 billion that they had in place back in 2019. And the other thing is, I mean, the company's so cash rich, they're increasing their dividend by about 6% from $1.42 a quarter to $1.51. Now, with that said, stocks are already moving, but they've got an earnings announcement tomorrow with the expectations that the company is going to be earning about 73% more earnings per share at $4.16 compared to $2.56 last year on about $52.27 billion in sales, up about 23%. So, I mean, if you look at the Q3 revenue was higher by 49% compared to the same quarter last year. So we're actually seeing some normalized revenue growth for Chevron. It's still going to be expected between 20 and 30% on a forward basis. But the company is just generating cash like there's no other, and I think they're paying patronage back to the shareholders in quite to an aggressive degree, with nearly 20% of the shares free float being bought back on a forward basis by the company. If you just consider the company's profit margin, I went and looked at the net income margin in the last 4 quarters. It has been exceptional. 15% net income margin for the business as a whole, because it is certainly a very vertically integrated company, both upstream from gathering and processing, midstream, transportation, pipeline storage, and downstream, all the way down to the pump in terms of the refining capacity, not just domestically but globally. I mean, their net income margin has increased by twofold based upon their 5-year average. So, some would say, hey, you're gouging the customer, you're making a lot of money. They are, but they're paying back their shareholders. So I guess one way to essentially get a rebate, if you will, on your high gas prices is to participate in buying the stock.
Yeah, George, is this Chevron or maybe these companies getting ahead of potential regulatory concerns, maybe that windfall tax that, hey, we're taking these profits and we're giving it back to our shareholders? This is the second biggest buyback in history behind Apple's. Is that possibly what they're doing here?
I didn't think about that, Tom. I think it's an excellent point. It certainly could be, because as I mentioned a moment ago, it's really unusual for them or any company to announce this big of a deal in terms of cash repatronage back to shareholders prior to an earnings announcement. So, if there's a lot of things going on in Congress now, and maybe a windfall tax could certainly hurt the company shareholders, so they're paying it out now before they have to pay it later in the form of a tax. So I think you bring up a great point. I can't say for sure if that is the case, but it does make a lot of sense because we know that there's a lot of public discourse going on about all the companies in the energy space that have really made a killing in the last year and a half or so.
Yeah, and a lot of those pundits are blaming the oil industry when it's not their fault. I mean, they're relying on the free market as far as crude oil goes. All right, thanks to George Tillis, Senior Markets Correspondent, helping us break down Chevron. Thanks, George. Let's bring back in Nathan. Nathan, your thoughts here on the windfall of buybacks, the dividend hike. I mean, this is, if you're a shareholder of this company, or if you're an investor looking at a company and they've got windfall profits, I mean, this is what you want to see, right?
Yes. The reason I'm kind of hesitating a little bit is because you're announcing the share buyback at all-time highs. And the other thing that I think, if you're in a company like this or any energy company, I think the biggest risk that you've got going on is what happens if the Ukraine-Russian war ends. Kevin, how many bucks do you think is in oil right now for the premium with what's going on in Russia and Ukraine, right?
Yeah. Go ahead.
Yeah, from a trading perspective, you got to think it's significant. Now, some of it is policy. Some of it is overall supply and demand. If China reopens, that could be the other side. Yeah. And you're right, Nathan. The war is a big premium. Is it $10? Is it $20? It's hard to say, but there is premium from this war. Except, Nathan, as you know, we're sending more tanks and more things to Ukraine, not less. There's no breakthrough imminent in the war in Ukraine.
Yeah, Putin won't back down.
No,
yeah.
He's got all his chips slid in, if you ask me, my opinion. But yeah, this is going to be tricky. But you're right. There's war premium involved in this. Remember, that's what took it to the 120 level and higher for a while. Was war, but it was almost a perfect storm there for a while.
Yeah.
But China's helped the overall price.
Yeah.
SPR has helped the overall price. There's a lot of things going on here.
Kevin, you got a comparison with crude oil. It's back above, $81 a barrel at this point with Chevron, if we can show that one too. But Nathan, there's the chart there. You've got crude oil on the bottom and then Chevron. And you've seen this divergence with not only Chevron, but Occidental.
Yeah.
Right. ExxonMobil, a lot of these names in this space have diverged, while crude oil has come down from those June levels above $120 a barrel. It doesn't seem to negatively affect these stocks because they make profits with it trading above $45, $50 a barrel.
There's the case, right? Yeah, they may not make as much money as at 120, but you're still making boatloads of income here, because if your break even is in the 40s. It's hard to get a break even. It's hard to find those exact numbers because they move. But if your break even's 40, $80 and above is just one windfall after another.
Yeah, and Nathan, you know, we mentioned the buyback, the huge $75 billion buyback. You know, maybe that's Chevron laying their cards out that, hey, maybe they've had a pretty good quarter here if they're going to give money back to shareholders like that. So you've got an example trade for us. Go ahead.
Yeah, for sure. And real quick, I'll say on that divergence that you're noting, I mean, keep in mind value, which is healthcare, energy, real estate, et cetera. If you go look back in August time frame, that's when it started to kick off. That's what benefited a lot of these energy companies. If you look at them year to date, there's been a rotation a little bit back to growth. Energy's been like the fourth worst sector this year in terms of performance, underperformance. Okay, so you've got a stock like this. And by the way, guys, with the war, that would be a victory for the world if that declares. We're just talking profits and business. Let's make sure that's clear. We would all love to see that war end.
Right.
But with a company like this, so yeah, look, the stock's up $7 heading into tomorrow morning's report. It doesn't tend to be a very big mover around earnings. Around 190 is where it's kind of peaked out if you look back in November. So, you know, the other thing that you want to keep in mind, because of that correlation between oil prices, Kevin knows this, you usually get a bottom around the February from seasonality perspective in terms of oil prices as oil prices kind of get in front of the summer travel, et cetera, and all the demand.
BuzzFeed is on a buzz
from
rip.
the travel that's going to go on with consumers. And if you look at the airlines and what their guidance was, looks pretty solid. So you would think that would likely have a net upside bias towards oil prices. So what I was looking at is, well, I probably don't expect that much of a big move post earnings. It's about 450, I think, was the implied move, something like that. But given that the stock is already up $7, why didn't they announce it tomorrow morning? I don't know.
Yeah.
That's kind of unusual.
You think earnings are
I really don't
good
know.
or bad based on this news?
I know, right?
Yeah. Kind of showed your hand there.
Yeah. Go ahead.
Yeah,
Nick.
hopefully that doesn't mean, hey, it's going to be a bad report, and that's why they're trying to get a bump today.
Right.
But what I was looking at, hey, if you're bullish, you could look at selling something like, because we do have a little bit of an IV inflation because of the report, selling that 190, that's where resistance is, putting together a long call calendar. I've selected in this example trade going out to the standard March expiration at the same strike at 190. The reason I did something like this is the implied volatility on that 190 out of the standard March is 23 versus this week's 40 IV. So I wanted, put together something that takes advantage of that. And then, guys, you know this. We got 6 weeks of weekly options in between tomorrow's expiration and March 17th, with the potential for oil prices to perhaps get some lift from seasonality. That's why I put together this type of an example trade.
Yeah, so let's break this down. Buying the March 190 strike call, 50 days till expiration. Selling the near-term Jan 27th weeklies that expire tomorrow at the close. The 190 calls. You're paying roughly about a 380 debit. It's probably closer to above $4 at this point because the stock's moved up a little bit.
I've got it 409 on the live data.
Right. So what you pay is your risk on this. You do have some assignment risk on your short option going into that result. Nathan mentioned the 180, just above 189 was its all-time high in November, Kev. But you still have a nice range.
GME looks like it wants to break
BBBY and maybe about 196, 197
no
on
volume
this to trade in, and you still can remain profitable.
Collecting a fair amount of theta, too, up around $82.50 a day in theta. Now, that's only going to be for the next 2 days, and then you either take it off if you get that move towards 90. That's always the first choice. Right. You could actually extend duration on this. You could turn it into a diagonal. You've got a lot of choices how you want to play this based on your opinion on Chevron stock.
Yeah, and as I mentioned, those short-term options that you're selling at a higher implied volatility, and time decay works in your favor, as Kevin mentioned, but you got to keep an eye on that short 190 strike going into expiration, whether you roll or adjust that particular strike or let it go out worthless based on if the market's open and the liquidity is provided. So maybe have to do some trade management there. All right, great stuff as always, Nathan. That's Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research, joining us, helping us break down markets in Chevron. But coming up after the break, Kevin and I are going to be joined by Andy Swan.
All right, SPY's moving up more here. Bed Bath just hanging out below VWAP. Same with GME for the most part. Yeah, BuzzFeed has been ripping. Boeing pleads not guilty to fraud charges in the 737 MAX. The SEC has just now once again rejected ARK's and 21 shares spot Bitcoin ETF listing. Alright, GME is breaking VWAP, SPY's moving up. I'm wondering if that IV indicator is a good one. U.S. National Archives asks former presidents and vice presidents to check for classified and presidential documents. SBF and FTX family members should be fully forced to provide their financial records about their wealth and any money received from FTX, according to new court filings. BuzzFeed did hit like 100%, didn't it? Going down up there. Yeah, BBBY did break VWAP. It's moving up. Get that 408, I'm gonna open up a short.
Essentially that they're starting to see early delinquencies. In other words, people not paying their bill for more than 30 days. Tick up significantly.
Yeah, I got some volume on that BBBY pop also.
Basis and kind of sounded the alarm bell on that. And that's an early signal that the consumer is getting tapped out. You know, when we look at trends at Likefolio, you know, consumer trends, just talking about spending, saving, that sort of thing, you know, we're really seeing a big uptick in the number of people talking about falling behind on their payments
incoming from my deposit.
general. So any debt payments that they have, they may be falling behind on. Their savings accounts are being depleted, and they've started to max out their credit cards. And when you put all of that together in a rising interest rate environment, it becomes pretty tough for a lot of people to keep up because, you know, people are losing jobs. You know, employers have a lot of power to not give raises in line with cost of living increases. And so all this debt's kind of piled up. And now the consumer really has nowhere else to turn. The savings account's tapped out. The credit card is starting to max out, and they're starting to fall behind on payments. And so we think, in general, you know, when we go into these earnings reports, it's not surprising to see some of these credit card companies get dinged on the reports. I think Visa, you know, setting up pretty well for a little bit of a bearish bet here. As you know, you noted, the stock has moved up over the last month or so, and it just seems to be fighting a real serious consumer credit crunch that is just getting started, and I think will continue into the near future.
Andy, I think you're hanging out with Tom too much. You're getting awfully negative here. I mean, that's not like you. I don't like the negative Andy Swan very much. But here's the thing, Andy. Everyone knows the number of swipes, right? That's how Visa gets paid, just like MasterCard, by the way, which is down $5.50 after beating on earnings and revenue. The swipes, though, I'll give you two scenarios. You tell me what's more likely to happen. Number one, a slowing economy, a recession hurts Visa, just like it hurts MasterCard, just like it hurts the overall economy. But here's the thing. Visa gets paid off percentage of sales. So inflation actually is a tailwind for Visa, isn't it? Because if the overall ticket price is big, they do better with higher ticket prices because of their percentage. So which is the stronger effect on Visa right now? The potential of a slowing economy, which looks like it's hitting MasterCard, or inflation raising that ticket price?
Well, I think both will be impactful, but the thing, the unknown of the two is how much consumers are going to be able to continue to swipe. What is known is the inflation rate, and you can kind of bake that into the numbers. You can kind of put that through. I think you're right. They get a percentage of every transaction. So when prices go up, that's great. But we kind of already know how much prices have gone up. What we don't know is how much elasticity of demand is causing consumers to pull back on their total spend. There's only so much in the pocketbooks of a vast majority of consumers to spend each month to swipe that credit card. And when they start getting to those max levels where their credit card is maxed out, there's really nothing that the banks can do other than extend more credit to someone that's falling behind, which generally isn't a good idea, or take the fact that they're going to spend less. And so I think spending less is probably the answer for now. And I do think, we're in the early stages of this. I don't think it's like red flags everywhere, but there are some yellow flags that people are getting a little tight here, and it's getting a little tough, especially in that middle part of the curve where most of these, credit card balance holders live and work every day.
And Andy, when you guys, I know you guys cover happiness quite a bit on a lot of these companies that you cover. I mean, when you look at Visa and MasterCard, they seem to be in one pod, and then you've got maybe Discover and American Express in another, because they do some lending on that side of it. What are your happiness levels look like for these credit card companies, and do you have an earnings score for Visa going into the report?
Yeah, it's pretty stable for something like Visa or American Express. I think American Express is slightly insulated from a lot of this because they tend to attract a little bit higher level from a financial perspective than Visa. So, going into this, we think Visa, the risk is just a little bit more to the downside. If I was going to bet one way or the other, I would probably lean bearish, but nothing out of control, nothing that tells us there's any dire situation here. It's just a little bit more negative. And
you're happy at 30K in debt
recently gives us a little more confidence that a pullback is probably likely after earnings.
Yeah, definitely. The stock is up, 11% over the last year, so outperforming the overall market. Yep. And maybe, conducive, because the bigger ticket price, as you mentioned, Kevin, people are still paying more, right? So they get paid a percentage, but at some point, that demand in Andy's data, as far as people's savings getting depleted, where they're just going to have to pull back on everything.
I think that's what you're seeing in MasterCard today.
Yeah, definitely. All right. Thanks, Andy. Appreciate it.
Thank you. All
right, that's Andy Swan, co-founder of Likefolio, giving us the data here on Visa. So we got a little bit of a head start on this on Visa with your example trades, just based on what MasterCard came out with at this point.
Exactly. It's hard to get overly bullish in Visa when you're looking at the price action in MasterCard after they beat on earnings and revenue. So let's turn this into a little lesson, and the name of this lesson is bang for your buck. Okay? So normally, if we were slightly bearish or neutral on Visa, we would sell a high probability out of the money call vertical, right? Okay. Let's say you would do a $5 call vertical, in this case the 230, 235 call vertical, trading right around 90 cents, right? Okay. With about that's
truck I love, the girl I want, a dog.
$10 in risk if you do it for 90. If you do it for 80, it's 420. You see on the screen there. Yeah. Now, maybe there's a better way to improve how you do it. What if you did something like this? Instead of trading a $5 spread, one for 90 cents, what if you did, Tom, $2.50 spreads? Like sell the 230, 2.5 call vertical, but do that twice. And what do you get there, Tom? 55 cents, right? That, if you do it times 2, that's the same amount of risk in terms of the width of the spread, but you're collecting more premium, Tom. You're collecting 55, 56 cents now versus only 90 cents on the $5 call vertical. So sometimes the way to maximize or improve your return, do more of the smaller width spread and keep searching for that best level here, Tom. So one $5 spread gets you 90 cents, two $2.50 spreads get you $1.16 now, Tom. So it's less risk, more premium taken in.
Sounds like you're practicing trading.
First one,
you don't need to practice
look at
investing.
Short $5 wide call
or just
vertical.
investing long term.
Selling the Jan 27 230 strike
don't
call.
look at it
That's
for 5
about
years.
$6 out of the money to the upside. That's what the option market's pricing in as far as a plus or minus move so far. Now we've got the risk profile showing 80 cents.
That's the way to
Stock
win
has
in the
moved up
market as a
little bit,
retail.
So you collect more option premium. But if you collect 80 cents, you've got, as Kevin mentioned,
Buy and hold for
$420
long
in
term.
risk per spread on that. With your break even about 230.80 to the upside on that one. Now, that's $400 in risk per spread on that one. Now let's look at the short, selling the 230 call, same call you're selling, but buying the 232.5 strike call, but doing it 2 times. Collecting roughly on our risk profile, we got 50 cents. It might be a little bit higher at this point now, but if you collect 50 cents, your overall risk is going to be the same, right?
Are you managing it though?
A little bit less than that, about $400 per spread, but you've got 2 contracts on that. You got short options here, so with only 1 day till expiration, you have some assignment risk going into this. But this kind of gives you a good idea of know your risk on either trade, right, Kevin? But how can you decrease your risk by doing potentially more contracts, which decreases your risk, but at the same time, doing more contracts, there might be some more transaction costs on that. No commissions. But
and one significant difference that we have to point out, the break evens.
Yeah.
The break even on the $5 spread is let's say at 90 cents is 230.90.
Yeah.
The break even on the $2.50 spread is going to be lower. It's going to be 230.50 or 250, so it'll be a lower break even. There's always a trade-off, Tom. That's the trade-off here.
Yeah, subtle differences in the risk, subtle differences in those break evens. I think the key here is knowing that if you're selling a neutral to bearish call vertical like this as an example, based on some of the Likefolio data, that you do have that risk. You want it to stay below the strike that you sold. And in these 2 examples, you're using that same short 230 strike on that, which is about 74% probability of finishing out of the money, which is what you want. You want a high probability of success if you think the stock's going to consolidate or go lower, or maybe go a little bit higher but stay below 230 into expiration tomorrow. All right, Kev, let's take a quick break here. After that, we're going to talk about Intel, which also reports earnings after.
All right, SPY's coming down here. Get to move that around. That's good. What's super conservative? Aggro. The December bullish move? Yeah. GME is coming down. SPY's coming down. I am very curious on that IV though. Might be time to get some leaps, or at least some upward exposure soon.
To earnings, right? Today, some 24 S&P 500 companies reporting, and for the most part, they've been pretty good. Eco data, which has been showing strong labor conditions. Even the housing numbers today were pretty good, and jobs report, GDP coming in better than expected. So today's move puts the 4 major indices well above the 50-day moving average now. The only one of the 4 that's still holding below that 200-day moving average is the NASDAQ, and it's just a matter of ticks from it. It's been kind of teetering right around that level here, so lots to keep an eye on. But I think what we're seeing in terms of the bid, pretty good reflection of that.
Breaking out.
I heard you guys talking earlier in the show about it. It's back down below 19, but yeah, still holding below those December highs. I think that's important to point out. Well off the lows from last month and earlier this month, but that's the next hurdle to the upside.
Yeah, Ben, and you look at, we saw a bid and go into the dollar. I think that kind of hit stocks off of those session highs. But it's also having, the higher dollars having an impact on gold right now. Gold hit 9-month highs overnight, but now we're seeing some weakness there.
Yeah, just a couple ticks from 1950, right, Tom? And much like what we've been seeing in terms of the bid in stocks, this is just continuation of the pattern we've seen. Gold coming off the lows from last fall. It was October, November, well-defined bottom around there, around 1620. That was after taking out key support, and everybody thought gold was going to break down. Seemed like a lot of people got caught on the wrong side right now. What I'm watching is gold with the U.S. dollar. Yeah, dollar down to 101.29 today, and there's been a pretty well-defined inverse correlation. But look at gold over the last year. You're talking 1,600 to 2,100. There's the chart. Basically through 1,800 through 1,900. That's through the middle of that range, which opens up a door for a retest of that upper extreme. So let's keep an eye on the dollar and rates as well. That 10-year yield coming off, I think, helped kind of buoy prices recently there also.
Yeah, from the beginning of November, gold's up about 19% so far. So we've seen some gains there as the dollar has fallen off of those highs. So really inversely correlated there, dollar into gold right now. All right, thanks to Ben Lichtenstein. He's
new year, new wife.
Future show here in the
Same
mornings
wife.
on the TD Ameritrade Network. But Kev, bringing it back in here, talking Intel, shares are off about 42% from year-ago levels. Having a decent month right now, but this one's been beaten down by AMD repeatedly over the last several years, in softness in PC demand and some other portions of their business really having an impact.
There has been a couple positive notes mentioning that the worst might be over for semiconductors. Truist came out with a note on Intel. Susquehanna
keep your wife from falling.
A note on Intel, both saying the worst might be over. This stock, you mentioned it, Tom, has been completely obliterated as they continue to lose market share and lose the overall PC game to AMD. So yeah, this is the stock. It's certainly beat up, but Tom, 4.9% dividend yield and a 9 PE, Tom. So it's showing where it is on the overall spectrum. It's beat up.
Yeah,
it's cheap.
Yeah, they're expected to earn about 20 cents on revenue of about $14.5 billion. But the year-over-year decline of 26% in revenue and 65% in profits. I mean, are you surprised that Intel's down 43% from year-ago levels, Kev?
Now, the PE's a 9 on this stock. Yeah. But if the earnings keep coming down, that PE's going to go up because the E side is going down, not the P. So if it stabilizes here, just be careful. But, a 9 PE with that dividend yield, Intel is still a big, massive player in semiconductors.
Yeah, that dividend yield, if it gets paid out, that quarterly, it's nearly 5%.
4.9.
Yeah. Yikes! I mean, they better do better, because, you know, I always think about that when these companies, how much cash, if they've got their profit margins starting to get squeezed, the revenue starting to deteriorate further, we're not probably going to come out of this hardware or computer personal computer, downturn for at least a quarter or two.
It's amazing, Tom. When you talk about semiconductors now, you talk about AMD, NVIDIA, all these other names. Intel is almost forgotten, and they're such a huge player, and they're almost forgotten.
Yeah, so implied volatility elevated going into this report, but the option market's only pricing in about $1.80 plus or minus move in the shares. So low because the stock's under $30 at this point. So wanted to look at an option strategy here, Kevin. I think there's a lot of people thinking, oh, well, Intel can go up. It can go higher because it's been beaten down so much. We've seen that repeatedly across the board in a lot of stocks this month. Intel's up 11%. But some stocks are up 20, 30%. NVIDIA hit the highest level since last May.
Yeah, all
today.
Stocks have recovered with yields coming down, the U.S. dollar coming down. The overall market has recovered quite nicely.
Right.
But it's like, if everything's coming off the lows, Tom, you want to be in the one that goes up 20%, not 10%.
Right, exactly. So let's take a look at this example trade here, Kev. It's out in the April cycle, so duration. It's not an earnings type example that we're looking at. It's a duration type of trade where you're giving yourself about 85 days till expiration. I looked at a combo trade, Kev. They're both bullish. You're selling an out-of-the-money put to help finance basically an at-the-money call. So buying the April 30 strike call, and then selling the April 27.5 strike put against it. You can see the risk profile here. If you pay a 50-cent debit, what's your risk on this, right? Well, it's a 50-cent debit that you paid plus all the way down to zero. You've got risk on that because you got a short put. So about basically, 12 grand or so in risk, buying power for the stock. That if you'd have to buy it if it went below 27.5. So you got risk all the way down to zero on this one. But you've got all upside above that break even at $30.50 to the upside. Now, you'll have some assignment risk on that short put, of course, into expiration over the next 85 days. But you've got that window, Kev, between 27.5 and 30, where you're just losing $50 on this.
Right.
And that's, I think,
consolidation day.
There you see that plateau below the break-even line. That's the debit if it doesn't get through 30 or it doesn't break below 27.5. So you are, I mean, Tom, you can understand the risk in this trade by the delta. It's an 80 delta. So you're almost long 100 shares of stock using options. So you've got unlimited upside. You've got downside risk to zero. It's a cash secured put with a long call, not the same strike.
Is it key on this type of strategy, Kev, where you've got to be comfortable owning the shares if it goes below 27.5 on this type of strategy?
There's a big
I think we might see teens again. It's possible. Market's undecided, I think. It's right at a tipping point, up or down.
And you're going to own the stock
and I think
there
Jimmy will
if you
follow.
choose to, unless you close the trade.
Right, yeah, and you got to remember, you've got that risk if Intel were for some reason to go down to zero. I got to mention that. I don't know why, but yeah, you've got some risk on the downside. Selling a cash secured put to finance that buy of an at-the-money call on that type of strategy. You get the most paying below 27.5. So remember that on that example trade. That's bullish to the upside if you think it's going to go higher over the next 3 months. All right, Kev, that's going to do it for you and I today here on Fast Market. Stick around, though.
Vanguard's net inflows fall by half to 151 billion. This is the way, Jonathan. Thanks, man. So one bullish thing on GME, though, that we were noticing is the IV has come down so much on these options. It might be time to go long. I mean, it could dip a little bit more first, I suppose, but once it gets into the 80s, it doesn't usually hang out there too much. If you look on here. Whoa, no, that's not what I want to do. I didn't want to do that. Get back. 52-week IV, the range is 96.95% to 136.58%. Our current IV is below that 52-week range, so it is pretty low IV right now. Which I guess could indicate a move either way, really, but I like to think it's to the upside. Rigged. I bought puts today, but I will quickly close them if we start to see volume and movement. We'll see this divergence. Bearish one. But it did bounce pretty nicely right above that 1944, which is that 2-year low. Easy go on the move up. Cosmos 7.7%. Express 8.25. Oh, THCH, that even looks like a good chart. Maybe a good short on open. Too soon.
Kind of back to square one, where we all began this period of a little bit more choppy trading. Let's call it 24 or so hours ago, a little bit, maybe 48 hours ago. So interesting. Obviously, Tesla, big mover. I'm sure we'll talk that as the show rolls on.
Yes, we will definitely talk all things Tesla with a nice move higher in reaction to its fourth quarter numbers. But as always, before we get to Tesla, we'll kick things off with our upvote and downvote segment. Following that, we will chart and trade our upvotes. And of course, naturally, our FOMO discussion is all things Tesla's fourth quarter, and then we will discuss. I sat down with Carrie Schwab-Pomerantz to dive into the importance of ESG investing. Such a good conversation there. Last but not least, our under 30 name today is Plug Power. Shares plummeting after it did lower its revenue guidance. An interesting stock with George Tillis later on.
Yeah, a lot of the alternative energy stocks recently sort of following out of favor after being kind of all the focus of last year alongside your traditional traditional fossil fuel oriented energy stocks as well. Inflation really dominating that narrative. But as we maybe move beyond inflation being maybe still on the stage, but not center stage throughout this year, at least that's the hope. We'll see how some of those different sectors perform. But as always, we'll start things off here with upvote and downvote, not endorsements, not recommendations, all over the board here, Jenny. Not a lot of tie-in to several of these names, but let's start with Seagate. STX is the symbol. And I can see real quickly why this one's on the list because it's making a massive, massive move.
Yes, make no mistake, it's not Tesla the only name that's fueling some of the strength we're seeing across tech today. Seagate Technology also pacing for one of its best days since May of 2021, now fueling its gain of about 30% for the year and up now over 15% for the week. Shares up over 10% currently, but they reported adjusted earnings that did fall from a year ago. Revenue also fell year over year, but also did come in better than expected. Now they expect revenue for the next quarter to be about $2 billion plus or minus $150 million ahead of estimates. They also declared a quarterly dividend of about 70 cents a share, which will be payable on April 6th. Following this earnings announcement, we saw several analysts increase their price targets, some of those including Barclays, Wells Fargo, Deutsche Bank, UBS, and Northland Capital. So some optimism for this name that is now about 41% off of its highs, but still down about 45% off its lows. So two ways to look at it there.
Yeah, no doubt. Obviously, a lot of work to be done to get back to those levels.
Oh,
but,
GME coming down there.
Quarter, no doubt about it.
Not with SPY.
Likes what it saw. And
bond auction came in. U.S. 7-year notes 3.5%, 77.5% at high. Not sure what that move on GME was.
We'll see if it can continue. Certainly some optimism here today, but the news is out. And so as we often do on this particular segment,
BBBY
names
also
find their way to this list for various reasons. Could this be a big move like you're seeing today? It could be to bring awareness to something. In this case, the news is sort of the story. It's in the rear view though now. That volatility-inducing event has now happened. So I'm going to say downvote, but certainly one to monitor and see if it can continue this ascent off the lows as it marches back towards those previous levels, but a long ways to go still.
Yes, and our next name does still have earnings on the horizon. That is Visa, following MasterCard's fourth quarter report this morning that I have to say was, all things considered, relatively strong. MasterCard signals some pretty strong spending still in consumers. They also mentioned their cross-border travel, which has rebounded very nicely, benefiting the company. MasterCard, though, lower in reaction to its fourth quarter. Visa not really doing much ahead of its first quarter results, which are expected today after the close. But cross-border volumes will also be critical for Visa, which these did rise 40% a year ago, as well as payments, which also did increase about 20% a year ago. Adjusted earnings are expected around $2.01 a share, which would be also growth from year ago levels. But transaction processed are another really key metric to watch when Visa does report. This stood at about 50 billion at the end of its fourth quarter. Guidance will naturally be critical, which is part of the reason we're seeing some selling today in MasterCard. It serves as pretty much a very important barometer for consumer spending patterns when looking at both Visa and MasterCard. But Visa down about 10% from its highs, up in a nice uptrend this year, up about 8%, and now about 29% off of its lows. So these names do offer a fair degree of resiliency when looking at this payment space.
Yeah, no doubt. And this is an example of another one of those names found its way on this list for more of bringing awareness to. Of course, the earnings haven't happened yet. You mentioned the report out of its kind of primary competitor in MasterCard, but eerily quiet here on the eve of the earnings announcement. So looking forward to it. Going to say upvote for this one. Excited to get the technical breakdown from Rick as well on this. Maybe it'll help paint a clearer picture. As you've talked about, obviously there's ties to the cyclical picture. The amount of money that we spend matters to a company like Visa. But at the same time, when times are tough, you're still swiping that card. Just what it's on may change. And with inflation inflating the prices of some of those more staple items that we need, that's kind of buoyed some of that gross payment volume. So we'll see what the outlook and what things are looking like at Visa in relation to MasterCard. But pretty tight correlation between the two companies. Going to say upvote for Visa.
Yeah, an interesting name. It'll be interesting to see if we can see a different reaction tomorrow after the report today. But our next name today is Netflix. Now, Netflix shares are down just over 1% after Phillips Securities did downgrade the stock to accumulate from buy, but this was one of those non-committal analyst moves, I have to say, because on the other hand, they raised their price target to $388 a share from $346, which does imply a good deal of upside. The analyst noted that Netflix continues to grow its subscriber base, and its basic with ads plan is showing early signs of promise. So some optimism there. They did cite this recent rally, though, as a reason behind the downgrade, given the fact that Netflix shares are up 122% off their lows, now about 20% off their highs, and hanging on to a nice gain this year, up about 23% since the start of 2023, Alex.
Yeah, roller coaster ride for Netflix investors. It's having to stomach that volatility. Those who did have that wherewithal, not entirely rewarded, I would say, given the fact that the stock's still basically cut in half from its all-time high, but certainly feeling a lot less pain than they were, let's call it, summer of last year when the stock was down at the 160, 170 range, and a lot of sentiment was negative surrounding this. But I do wonder, I guess obviously it's considered a downgrade going from buy to accumulate, but both of those to me sound like words that mean get more shares. So maybe accumulate means buy if the stock goes lower, and buy just means just keep buying it no matter what the price is. So we'll have to talk to those analysts and get a
Nat gas is
more
moving
clear
up.
picture.
We're going to
But
go
clearly,
long.
all jokes aside here, price target above, stock's had a huge monster run.
Okay, I got some nat gas.
A force to be reckoned with.
Some,
I'm going to say
QG
down both, though. We've talked it a lot.
contracts.
We have talked to Netflix a lot, so we'll take a pause on that one today because our last name today is American Express, which also does have earnings tomorrow before the open. Now, why I think American Express is so important to talk about is because it's different than Visa and MasterCard, but we do often pair these three companies together. Now,
Buy coming down here. I didn't have enough margin to open at ES again.
Adjusted earnings of about $2.22
Could have just held it short. Oh well.
Following adjusted net income decreasing about 6% year over year
Whoa, nat gas
for
big
the first
pop
9 months
for
of
news.
2022. This, they said, was mainly due to an unfavorable buildup in provisions for credit losses, which I think signifies the fact that this company operates quite differently than a Visa or MasterCard. They also serve somewhat as a bank. But the street is anticipating revenue to come in just over $14 billion, which would suggest a jump of about 17% on a year-over-year basis. And they've also benefited from better volumes as well as higher card member spending due to that significant rebound we've seen in travel and entertainment spend. A rise in overall spending is also expected to boost their discount revenues, which is their largest revenue driver. Net income, which is its second largest revenue driver, is also expected to have risen about 28% in this to-be-reported quarter. So all things considered, will be interesting to see the reaction because last earnings event, if you can recall, they posted pretty strong results and we still saw a good degree of volatility. And American Express oftentimes does represent that more high-end consumer, which we've started to see some weakness in that area. So any clarity on that will be welcome tomorrow morning.
Yeah, I think you highlighted some of the key distinctions. Obviously, Jenny, this one's customer mix is, of course, is different as it's tied to more corporate spending, maybe higher income consumer as well. More of the charge card, but it is both the network as well as kind of taking that credit risk on. So it has different risks as well than traditional Visa or MasterCard, which are primarily just a network for swiping, and then those banks take on that actual credit risk. So some different factors to think about here, and of course, always interesting to hear American Express give us the outlook and the results because it is so much tied to corporate spending and it helps us get an idea of what that landscape looks like. So going to say upvote. I think that while they're different, there's enough in common to make this a very seamless theme between the two.
Yeah, couldn't have said it better myself. I was going to say different, but equally important to Visa's earnings events. We'll be moving forward with our two upvotes, those being American Express as well as Visa. We'll be diving into the technicals, looking at some example trades coming up next.
FDA authorized marketing of 3 new tobacco flavor heated tobacco products, including Philip Morris's supplemental PMTAS. See if Philip Morris is popping on that. No. Nothing. Here's the nat gas chart. So on the 60-minute here, we've got this green engulfing candle. Nice uptick in the RSI and a bullish MACD. So might have a little rally here. I did go along with 3 contracts of the minis. Been pretty flat though for the last couple weeks after a long sell-off. Yeah, it doesn't look like there's any floor on this thing though. Going long does seem silly, but it's crazy how nat gas, like, it was so volatile for so long, and then it just ended up just tanking for like 3 months in a row. Now it's just flat. UWU.
And MasterCard signals some strength in multiple areas, although guidance came up short. So we're seeing some weakness today. Visa not really moving a whole lot ahead of this earnings event. So we need help on the technicals here. And to do that, I'd like to welcome in Rick Ducat, our chart master. Rick, this name has been a resilient player throughout the fintech space, just given the fact they've highlighted this consumer spending, benefited from the rebound in travel. But now all eyes are on this quarter. So what are your thoughts on a technical basis?
We're up about 28% since our yearly lows here. This was kind of the start of our rally upward in the recent months here. And ignoring this candle from the other day when we had some issues with the exchange, it was looking like we had an important breakout recently as well, above this green dashed line, this 217 mark. This is a point where price topped out multiple times back here, here, and also here. And then we broke up above it, and we've been rallying ever since, kind of not really getting as much of a big breakout, kind of chopping around a little bit more lately here. But the next important level to watch, 228 to the upside, this red dashed line, that's about where price topped out there.
I have no idea what turtleneck.
Looking at the overall shape, we're in a bit of a rising
I
wedge.
thought it was some kind of Steve Jobs reference.
Bearish price pattern here.
That was something with Apple. I don't know. I saw the speculation on the Apple history, and
could also change things significantly too regarding the direction and the issues that face this stock right now.
I don't like how much fun he's having.
Looking at momentum,
with
the RSI was trending downward a bit. We're seeing a little bit of bearish divergence.
The cryptic messages,
so momentum was fading as price was rising. So that's not usually what you want to see. But once again, remember, earnings could change everything into a whole new ballgame very quickly. In terms of potential upside, the 228 level was the first thing I had my eye on here, this red dashed line, which is roughly in confluence with our upper trend line there. Beyond that, if we do keep rallying, the 236 level looked interesting because that was the next peak from way back there about a year ago almost at this point. To the downside, 219. Our yellow 21-day exponential moving average could serve as support, and we've got that 217 level just below that. So those are some key price levels to watch heading into this earnings event.
Okay, so I'm going to go to the upside here and look at 228 as well as 236, which are both obviously above where we are currently trading, despite the fact that shares are pretty much doing a whole lot of nothing today. When looking at a trade, however, going with this more optimistic mindset here, Alex, Walk us through what you're thinking for an example trade, then leaning more neutral to bullish.
Yeah, in both cases, and just to give a little preview of what we'll look at in American Express as well, both of these are earnings-related names. So I looked at premium selling strategies, that feeling of an inflated implied volatility before the announcement, and then that normalization post the announcement also gives a little bit of a greater window of a potential opportunity to reach max profit on these trades in exchange for possibly a higher notional risk than that reward. But we'll get to that in a moment. I want to look at specifically the trade for Visa here, in which it is a neutral to bullish strategy, and then we're selling a put vertical out of the money. So risk defined on this one. But the reason I went neutral to bullish in this case for this particular name is it has shown signs of resiliency. But one of those key differences as we kind of compare and contrast these names is that Visa isn't taking on that credit risk. And so if you look at where it is down sort of the chain of reactions, if there is going to be tougher times ahead, kind of the last step is the swiping stops. It isn't necessarily going to happen so that the banks have default risk, and then, but before that, the swiping stops. It sort of is the last shoe to drop. Is the spending actually completely stops, and so that's what would impact Visa. It's going to have that resiliency until that point, and so looking at a neutral to bullish strategy with that in mind. The 215, 212.5 strikes being the one selected. 50 cents is 1/5 the width of the strikes, or 20%. 4-to-1 risk-reward ratio, max profit of $50, max loss of $200, 214.50. Simply subtract that 50 cents from 215. None of that accounts for transaction fees, of course, but that's your theoretical based off of that 50 cent price point being the fill price. Classic looking risk profile for what we looked at on this show, though, Jenny. Elongated Z risk profile. As long as these options expired worthless, you'd anticipate max profit. That's most likely to occur if all those options are out of the money. They're out of the money as long as the stock is above 215.
Yeah, relatively straightforward example trade, and you highlighted something that is important, I think, for our next name, American Express, and that's taking on those credit risks and credit losses, perhaps, into this new year. So when looking at American Express, Rick, I was seeing shares have been rejected now a few times, around 160, 162-ish, and right now hanging out around just over, right now just slightly below that. So we have seen, attempts to break out, hasn't yet done that. So what are you thinking from a technical basis?
It's looking like more of a triangular type price pattern here, symmetrical triangle, where we have a trend line going down across the highs, up across the lows, converging toward each other. So a similarity between this and our last chart is that both stocks are trading above all three of their three moving averages that we follow, our yellow 21-day, orange 63-day, purple 252-day exponential moving averages.
Use any of those.
But the difference is that the shorter-term moving averages are below the longer-term moving averages in this case, which suggests that the trend is more toward the downside. But really, it's been looking kind of sideways lately as well. So really not a lot of strong directional conviction heading into this earnings event here. It was looking like we might have broken out a little bit above that upper boundary of our triangle pattern there, but it was smacked back down pretty quickly. Now we're trading below the purple 252-day EMA, which is coming in right about 154.80. So we're a little bit below that level. RSI was interesting to me as well because it looked like we kept topping out at this level right around 60 on it over and over again, and we are seeing a slight bit of bearish divergence once again here, where the RSI was trending downward as price was trending upward and making new relative closing highs. So that suggests that momentum is weakening a little bit to the upside here. We're already not in a very strong directional environment, so that could be an interesting thing to keep note of. Once again, though, earnings could change a lot of this, so it's important to look for some potential stopping points if we get a big move. The 162 level, like Jenny mentioned, was a point where price topped out around there, and just below the 162 level right there as well. So that could be a point to keep an eye on going forward if we get some upside action. To the downside, take a look here at the confluence of our two shorter term moving averages coming in right around 151 to or 152 or so, 151 to 152.
So momentum slowing into their fourth quarter report tomorrow morning, looking a little bit weaker than, say, Visa. But all in all, this name has been a strong player in this space throughout the last year. But we'll leave it there. Appreciate all of your technical insight. As always, Rick Ducat.
Still shilling OPEX?
But Alex, we're looking at this name, say, taking a different approach than what we did with Visa, and considering the fact that these are, like we've highlighted now several times,
maybe it was pushed back a day because of MLK Day.
Serve different kinds of consumers. What are you thinking for an example trade than taking the opposite approach?
Yeah, for a couple things. So if we look at similar approaches but opposite directional kind of outlooks, and maybe the reasoning for that, if you're looking for sort of a fundamental explanation for that, it would be one line of thinking.
Yeah, I know.
The consumer that it's
I kind of want to get back into it.
More corporate. We've read a ton about sort of that tightening of the belt lately when it comes to the corporate spending. And of course, that's illustrated by the amount of layoffs that we keep hearing about. Obviously, layoffs in most cases would be after cutting expenses elsewhere.
People are selling it,
and
just
so
holding
if
up.
you're looking at the steps that corporations are taking to reduce spending, ultimately that could impact a company like American Express, but also highlighting the fact that it has that closed loop network, which is seen as a competitive advantage at some times, and it can work against it in others. And so what I mean by that, of course, is being sort of the bank in the transaction as well as the network, where of course a Visa or MasterCard just simply represent that network, and they maybe partner with a JP Morgan Chase or a Goldman Sachs or whoever it may be to issue those cards. And so neutral to bearish in this one, if you're feeling that some of those risks may materialize in the case of American Express and ultimately show a more bearish outlook on this one. And so with this one, selling a February 165, 167.5 call vertical, 50 cents is the credit, neutral to bearish. 165.50, $200 in total risk on this. So almost the exact same type of strategy that we just looked at in Visa, but this is sort of the mirrored version. Flip it over and see it the other way. And so you can see that risk profile looks the same. In case this is the opposite counterpart
bouncing off
the bearish side, 165.5.
GME is a lot more bearish. It had a weird sell-off there, or like 1 o'clock.
Above 167.5 is the max loss line of $200. And then, of course, if these options expire worthless, as the same would be for Visa, that's where the max profit is realized, not accounting for the transaction fees. That's most likely, again, to occur or be the case through that expiration date if these options are fully out of the money. And so in this case, because they're calls, it would be below 165. But I always like when the strategies, at least for illustration purposes, are very similar. And then you can kind of walk through the thought process. So that's one line of thinking. Obviously, you could have completely opposite viewpoints. You could look at this in completely different industries, but kind of looking at two names, making an assessment, be it right or wrong, and then acting on that assessment through strategy.
And I like two different ways to approach these companies, as they both have earnings events now in the near future. But also important to keep in mind for both of our example trades today, multiple legs can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next, it's time for FOMO. We're looking at all things Tesla.
Bye, bouncy, bouncy. U.S. mortgage rates have now declined to 6.13%. This is the third weekly decline in a row. Little nat gas is holding up, putting a little bull flag, but I don't know if art patterns matter a whole lot with commodities. I think more trends and moving averages. OPEX is every month. You have a monthly options expiration, hence the shortened phrase OPEX. It's on the third Friday of each month. when the options expire. So January OPEX was on the 20th. February OPEX is on the 24th. Or sorry, the 17th. March on the 17th as well. Every month except the Febtober OPEX. Yeah, don't let that Febtober OPEX get you. And there's a nat gas dump. Okay. I see you, Moon, with those HKD shares.
Percent, and it goes to $1.51 a share. That's an increase of 9 cents a share. The dividend is payable for March 10th of this year to all shareholders of
yes,
record
T69.
on February
I think it was C69.
16th.
Yeah, T plus 2 from OPEX, which is 2 trading days after.
That are going to give that perception of strength, and I think that chart alone
because
last year, I think, does that.
Options that are exercised if the market maker's not hedged.
These energy companies, these
market
big
makers
oil
have to go and buy the
had,
shares
more
of those that exercise the options.
2 weeks than, of course, maybe they did
sure
2 or 3 years ago. But
and it takes
a
2
lot
days
of
for
these
trades
more legacy
to
names
settle.
you talked
So
about
that's why you
have
get
weathered storms. They understand that while times
T
can be
plus
good
2
sometimes, they
from
can
an
be not
OPEX.
so good at other times as well, and they're usually pretty good at controlling how they react to those times. But if you're a shareholder in this is again more increases potentially to that total shareholder return. Obviously, optimism expressed there today from the company, and that's spilling over into the stock performance as well. You know, Renita, I thought there was an outside chance we might be talking BuzzFeed and AI writing content here, but this is way bigger news, way more, I think, pertinent to investors. So I'm glad we had a chance to talk some Chevron here. CVX making a nice move. Renita Young, always a pleasure. Senior markets correspondent for the TD Ameritrade Network with the developing story. Let's bring back in Jenny. It's time for FOMO. And while it might not be a still developing story, I think it's still a pretty big story, and that's Tesla.
It is. It's a pretty big story. It's been pretty much a big story all week long, but today's result, or yesterday's results, I should say, and today's reaction did put some of the Tesla bulls at ease and maybe silence some of these Tesla bears that have been growing increasingly loud over the last several months, and with good reason. I mean, shares are still off about 55% off their yearly high, but now in a nice recovery this year, and now putting its stock above its 50-day moving average levels we haven't seen since September of 2022. Still well below its 200-day moving average, however.
Yeah, they could have covered exposure on Monday, for sure.
Really, its earnings beat, as well as upbeat comments from Elon Musk. Adjusted earnings coming in around $119 a share, which was better than expected.
Eyes coming up here
that did
more.
exceed the Street's forecast, although fell up short of Tesla's previous guidance. The fourth quarter did mark, however, its highest revenue, operating, and net income.
I wasn't expecting just a little rally from OPEX. So
we saw fourth quarter total.
I'm still expecting this cycle from maybe it's futures rollover swaps. I'm not sure, but this one that seems to happen every 70 days or so.
A really critical aspect of this report coming in
We're
better
due for
than
that one,
feared,
and
which had been
oftentimes
a
it's
major
kicked off with an
concern ahead of
OPEX.
this report, following its discounting at the end of 2022, as well as further price cuts at the beginning of this year. So this perhaps puts some of those
Monday was
eases,
not what I was
to the side
anticipating.
here. But for the full year, their operating profit estimate range is between 9 and 30 billion. This is a huge range.
goes
This
SPY on
signals
up.
the fact that we could see more volatility ahead for Tesla despite this nice rally in reaction to their earnings. But next up, for those that are keen on Tesla, which I would definitely say we are, based on how much we just talk about this stock, Alex, it will be their company event, which will be on March 1st. That's another catalyst to watch, at least in the near term.
All right, so a couple things here. Obviously, the numbers speak for themselves, and I think Tesla investors are hoping for a Netflix-like recovery. It's got to start there. Obviously, it's been decimated over the last few months, and we got to start somewhere if there's going to be a recovery. And if we remember anything about Tesla, when it decides to start making a move, be it up or down, man, does it make a move. And it's proven that already with over a 50% rally off of those lows in very, very, very short time. So we'll see where things go, of course, in this. But I want to highlight just why I say that this stock could be a FOMO candidate, some slot as a segment somewhere on this show.
They turned off the traction control
financial news programming show every single day. We talk about Apple a lot. Apple's had about 30 million shares trade today. Guess how many Tesla's had? I know it's Tesla's day. It's their earnings day. I get it. 172 million shares. That is massive.
Okay, so that's funny that you say that, because I was reading this report on legacy auto players and why we don't discuss a Ford or GM as much as Tesla. It's because Tesla's volume is so much bigger than its legacy players, whether you believe in that or not. And in terms of the street, the analyst community also really favors this stock, and that is absolutely a fact when you consider that 64% of analysts do have a buy rating. Compare this to all S&P 500 stocks. The buy rating ratio is just about 58%. So then you could make the statement, just based on those statistics, that the analyst community does feel more strongly on Tesla than they do most S&P 500 stocks. That's just a fact. The average analyst price target is around 206 a share. Their price targets really have a huge range, Alex, I will say, but 206 on average, implying a good deal of upside, even with today's nice move higher. So this name is interesting on a technical and a fundamental front. I have to say, I think we got way too consumed with Twitter headlines. I know that both companies are led by Elon Musk, but I think that dampened some sentiment around Tesla, and it's nice to finally see some Tesla-specific news to then stray away from all of this Twitter drama, which if I was a Tesla shareholder, I'd be so frustrated with that.
Yeah, I completely agree, and that's been my thought on it the entire time. Is a lot of those are just headlines. They're interesting to read, and if you're a Tesla investor, they're just distracting, quite frankly. But to talk a little bit more about the activity and why it gets the coverage it does, one, it's got a superstar, famous, kind of hot button celebrity type as a leader. So that's going to be interesting for one. So it's got the interest factor. But with this kind of volume, it makes sense, because this is what clients, this is what viewers, this is what traders, investors are already looking at. So there, in turn, those who are covering things are going to talk about it. And then for those who aren't already looking at it, or then hearing about it, so then they're going to look at it. It's this reinforcing, almost self-reinforcing loop that these big names, Tesla and Apple, and Tesla is the number one when it comes to this in activity and the amount that it's talked about. It just becomes this loop of activity and awareness and coverage, and then you throw in the fact that it just has headlines every single day. Compare that to a Ford or GM. It's nothing against those companies, but the investments they're making in this space are seen as defensive because a company like Tesla's coming in and disrupting. What Tesla's doing, at least this would be the bull case, is what they're developing is going to change the world. And it's this revolutionary technology. You kind of know what you got with Ford and GM. We don't know what we have yet with Tesla, and that is why it's so interesting.
Yeah, that's a really good point. And that also speaks to the fact that their energy storage business actually fared quite well. It was up a whopping 152% year over year in this most recent quarter. We don't even discuss that. And that's a huge aspect of this company that does separate it from, obviously, the legacy auto players. Although I guess the bear case, and to keep things balanced, would argue that Tesla does trade at a valuation more like a tech name, not at all an auto player, when it does, in fact, make cars. So its sky-high valuation is a reason that we've seen a lot of its critics come out of the woodwork here over the last several months and say the stock was overvalued. But now today, I definitely think the FOMO feeling is, at least to the upside, we're seeing some recovery in the analyst community, also fairly optimistic, more price hikes than I've seen on Tesla.
Yeah, I think we could come down.
And also,
to 15.
agreed with you in terms of the direction of FOMO, but that polarization conversation that
I think we
the
come down to
non-belief
10,
versus the ultra belief.
But
it's
if we're
so
in a
bearish
pattern
it could
up
be
here,
worthless to
maybe like
it's
12
so
and a half.
valuable that it could be worth more than everything combined. Is sort of those two polarized views. Makes for the volatility,
I'll show you the
makes
chart
for the interest,
that I think
makes
we're
for the activity.
at.
That argument that we watch in
Seems
real
scared me.
time as those bid and ask change is what makes Tesla in many ways one of a kind when it comes to the financial markets. And so with that in mind, though, we're going to look at a risk-defined options spread, make it a little bit more accessible, control that volatility to some extent as much as we can so that participation in this name maybe isn't necessarily eased in terms of risk, but at least known. And we're finding a level of risk that is potentially comfortable if this is something that meets your financial goals and risk tolerance. But what we're looking at here is just simply going to February. So again, we talked about bullish direction today being that fear of missing out. And in many ways, that is the case. Of course, we know that the bears is highly populated as well. So there may be a contra spread on the put side that could be used to reflect that. But buying a one in, one out of the money call vertical, a traditional debit spread, $5 wide, kind of surrounding the current price was the strategy that I looked at. And the reason I find these strategies interesting at times, particularly in names that trade with a ton of volatility.
Okay, I'll mute him for a minute. Thank you guys for your likes. I appreciate it. 39 of them. All right, word. Yeah, I think if we are in this spot, this bounce right here and all this, SPY's moving up pretty aggressive there. If that's right here, which is kind of what I'm speculating now, then this might be next, which is a new low, which would be, if this was 15, this would be like 12 and a half. Not to say that we'd necessarily make a new low, but we could. Other times we've kind of double bottomed. It's been a higher low. Here's a little higher low. This one was kind of this longer, lower low. But I think at least it's kind of a retest in that area. Does GME get any love from that? No. Ain't no love. Yeah, long term it looks like a penny stock, just with the numbers being much higher. SPY is moving up, up, up. Ooh, all right, glad I closed that short and that long. And I think I'll still do a short if we hit 308.
Hopefully this earnings event is now behind us, but that does it for our FOMO segment today, which actually Tesla's a great segue into our next conversation. I sat down with Carrie Schwab Pomerantz to discuss the importance of ESG investing. We'll dive more into that coming up next.
Yeah, hopefully it's not just continues to get lower highs. But it might until earnings. I'm thinking now, to really break new highs, I think it's going to have to be post and earnings beat and probably positive EPS, and I think that'll probably set a rally off that will cause some problems and cause people to have to close, and it will add FOMO in there. And so it seems like until we have that earnings, it's probably going to continue to make lower highs. Or at least probably not higher than 335. But I don't know. I mean, I was thinking 40, and that's if we were right here on the chart. So if we still are kind of in this area and we get a move up soon, then percentage-wise, this is 150%. It was about 40. But yeah, still kind of suppressed basically. And not a breakout to the upside, I don't think, until there's a fundamental catalyst. Even if the market's frothy and juicing. And here's the SPY in the afternoon. A bull trap? Yeah, no, I don't. Yeah, I mean, I think the whole market right now is kind of hitting a temporary top. I said Tesla would go to this like 3-4 days ago. Maybe it was a week ago. I figured it'd probably rally up to this resistance from back here. 165 or so. I'm not sure if it'll make it. Looks like it probably still could. But yeah, no, I think he's right on a low for Tesla being in the 60s. Yeah, 66, that high before COVID. I could see it getting down there. You're not going to see it just in the middle of a big SPY rally. And then after pretty good earnings, it's going to be when the market's, when everything is super, super cheap and everyone's scared. Yeah, this is what I was afraid of with my short. This candle turning green and just looking like a green Friday, green Monday to hit 408 or even break it. But I will wait. I'll wait for the short. Boom. If you held daily calls through all this though, you're probably still negative on it. This was beautiful data farm. Sure, shorty man. I got puts on GME today. I did close out of stuff yesterday, anticipating a move, but then it was like, oh, we've got Martin Luther King, so it's pushed back a day. I guess today's not over, so it could, and I'm more than happy to flip and go back long, but I think consolidation, chop, and downside, like here, potentially. And I'm thinking that for SPY also. Like maybe another day or two, then we get the data next week, and we'll see the top. What in the world? That was weird. What if my graphics card just restarted or something? Two of my monitors just shut off. Just two of them. Oh, SPY rejecting this resistance right up here, maybe. I don't really care to hear about that. The morning I got cheap 405s. Are you down on them? Happy guy in a happy money chat. Yeah, I mean, if it was a day like yesterday, you would have done great getting options right in the morning. And you did great yesterday doing that because you just had to grind up. But after such a big move to the upside and then a big gap up, you know, it's not likely to just rip, like gap and then rally. I was kind of saying this in the morning when we started selling off, like probably just consolidation type day. But it could still, I mean, we could still end up with new highs for sure. I mean, it's holding up really well. It's not like, it doesn't seem like this is the top of this rally so far. I mean, yeah. There's still like that subtle divergence there, but today's candle and RSI uptick is kind of blowing that out. Look at GME just inversing to the downside. Gonna trade this correctly? Yeah. GME is a good trade to the downside. That's a much easier trade. Why do you cook oatmeal? It's better for you. Actually, yeah, raw oatmeal is actually, I can't remember what it was, but not good for you. Yeah, riding profits. There you go. It's getting a little move up. What's your break even? Yeah, I mean, if your 405 is getting the money, we might see that 408 today, and that's where I'm gonna take a short. Is the older GME calls one more day? F17s. I got a really bad entry on mine, so I had to cut them pretty quick. Yeah, you've got some good time. I was noticing, I mean, the chart to me looks consolidation or bearish, but just the IV coming down so much, that to me indicates a rally is going to be coming soon. So a move up on Friday would be highly unusual, but GME has done it. Just that's the exception, definitely not the rule. So if you're going to close them tomorrow, I mean, closing in the morning, you probably get a better fill than trying to close them right now when it's coming down. It's been, middle of the day. Selling in the morning is always the best, it seems like. Not always, but majority of the time. So yeah, GME inversing SPY here. BBBY is just falling asleep. I haven't been following it, Sergio. We're looking at BuzzFeed. What's that thing doing? Whoa, another 50%. Dang, dude. One halted to the downside. Look at BuzzFeed go. Should have put money in that, I guess. Yeah, it broke that 212 high over here. It totally just day traded this thing. Yeah, you might still be better off trying to wait till tomorrow. However, Fridays are usually bearish, so possible there's not a better opportunity. But with the market looking just holding up here, it might have another green Friday and it's under its belt. Up its sleeve. Been what, 4 in a row? Two. This is one reason I closed my short. 3, 4, 5. What the heck? Been 5 in a row. 5 big green daily candles on Fridays. Good luck for your puts. Tomorrow's Friday. Would you consider complete sell and start fresh on Friday? I don't know what you're talking about, selling or starting fresh with. Put some into BZFD? Oh, BuzzFeed. At 190? Nice. I know, I saw it. I quit looking at it. I was kind of curious on GME today. 190, yeah, just after that breakout of that consolidation. Good entry. I don't know how much more she got in her, Captain. And I guess there's not really resistance until 320. But this thing is already up a lot. Got a little topping candle up here, inverted hammer. CRGO is new. IPO, I don't know. No. Unless, was it a SPAC? Oh yeah, it was a SPAC acquisition. It just de-SPAC'd maybe. Weird. The anniversary of this squeeze, because that's gonna make the stock move. Buy my share as a gift, like another share. Sell all the positions. Sure. Yeah, BuzzFeed. I quit looking at it. I saw it at like 90, and we saw it at 100%. I haven't seen it since then. It's 150%. Whoops. I'm liking, thinking natural gas might be finding a bottom, actually. Just looking at the volume, starting to show like signs of accumulation. Hasn't shown any like candlesticks necessarily yet, but all this volume picking up. And it's getting to low, the 9s. Show you another example. I mean, you can kind of see it here where all the volume is getting heavy. It's showing a top. A lot of distribution of stocks, shares. Pretty even here. But yeah, just this volume picking up seems like it's starting to get some buyers. On the futures chart, you can see an engulfing candle here. I guess you can see it here too, sort of. I think I'll keep my. Yeah, I've got some volume on it today too. I think I'll keep my nat gas contracts for now. At a pretty cheap price, very cheap. Takes off after hours. Well, I hope not, because I've got covered calls. I'm holding until tomorrow.
In terms of operating metrics until 2024.
It's coming down. Looks like that inverted hammer might have been the top.
Maybe don't just invest in everything blanket because some legislation was passed that is perceived to help an industry. I mean, it's easy to say in hindsight, but we had this conversation yesterday. My question to you is a little bit more, I guess, macro, high level. If a company can't accurately project what it's going to happen next year, I mean, 80% to 45 to 50%
only took new lows on the day.
Off. I don't know how to understate or to overstate.
I bought puts here,
and close.
They're not up until here.
With any confidence,
this is just
feel
premium
that Plug Power has any idea
burning.
what's going to happen in 2030?
That's the thing. I mean, if you look at 2026 targets, remember this year they're expecting 1.4 billion. 2026, they're expecting 5 billion. In 2030, they're looking at 20 billion. Again, I agree with you, Alex. I think that's way too far out in the distant future to give any guidance for a company, especially like this one, which is facing some competitive challenges. And I think at the end of the day, you know, we talk about electric vehicle and EV technology and lithium battery technologies. I mean, hydrogen fuel cell technology is very unique, but you have to think about the cost of lithium ion batteries, which again
of GME.
Can become very competitive with hydrogen fuel. So you have that to deal with as well. With this type
maybe
of
you shouldn't buy more and
in other
just
words, competing technology. So
sell them.
I can't say, you know, either way, guys, what to do with this stock. I will say this: maybe in the back half of the year, if interest rates start to fall and we see a big spike in the growth sector, technology, as well as the markets, you may end up seeing a company like Plug Power outperform just because of interest rates, not necessarily because they're becoming profitable sooner than later.
So, George, my question to you does relate back to our conversation yesterday with Sunrun, because you mentioned the competition in this space. It's a growingly crowded space and one that's fairly speculative. So if you were looking to invest in, say, this alternative energy space, Plug Power is a name that's been more volatile than, say, like a Sunrun, a First Solar, obviously different companies. But in terms of speculating on this space, I mean, is this name, given the fact that we've seen it all over the place, fall, then slightly rebound, and now down, you know, as much as 8% today, do you think that you'd be taking on the approach of looking at more of these stable solar energy names?
Yes, I would actually. I mean, I know the ranges for estimates for companies like Tesla are very wide. But I will say this: I mean, the company is very profitable. So I'm not saying to invest in Tesla. What I am saying is that if you wish to have more visibility in your return on investment, and to play the electric vehicle space, lithium ion space, solar space, energy storage space, because there's a lot of different companies out there. Maybe some of the larger best-of-breed companies are the place to be. I don't know myself right off the bat, maybe an ETF, but that's something else you could consider as well to help smooth out some of the company-specific risks, or even technology-specific risks.
I played Plug.
If you're looking at alternative energy.
I played in 2018. I think it was more recent
Tesla
than that.
is a very profitable company. I know it's a very controversial stock right now. But their multiple is falling relative to their earnings, which are growing. And so I'm just saying that sometimes, even though price can cause people to shy away from an investment, don't look at price, look at earnings per share. Even though Tesla's an expensive stock, on an earnings basis, they may not be.
Good stuff. George, I'll tell you this as we kind of close things out here. If you got to soften your bad news with this news of
EPS on Tesla is
future,
good
I'm
deal.
a skeptic by nature. It seems like you're selling me something, and what you're selling me is hype. And so until I see it, I'm not going to quite believe it. So we'll see where Plug Power goes from here. You said it's been around for a long time. Let's see it become profitable. Let's see it reach some of these lofty targets before we're going all in here. But interesting story, no doubt about it.
The contrarian.
George Tillis as well as always senior markets correspondent.
The kid.
Always a pleasure on
is too risk adverse for Plug than the older guy. That's funny. You're too aggressive for me on Plug Power. I want something like AT&T. Consolidation day for some PCE data tomorrow. Let's check it out. So 27 real disposable incomes and spending. I wonder if that can move the market. Probably not, but PCE should, or PCE, these things should have some impact on the market. So far, a lot of the data like this has been pretty close to expectations. So the market's kind of just been rallying that they weren't surprised horribly. Even said the jobs data is bearish, since it was, well, everyone still has their jobs. For PC index year over year. Your inflation expectations, consumer sentiment. These probably won't do quite as much at 10. But yeah, 8:30 we'll see it. So and Monday, Tuesday. Not much on Tuesday. Wednesday we have ISM manufacturing, job openings, Fed funds rate, Powell. So we could be looking at the downtrend starting on Wednesday potentially. I think it wants that 408 first though.
Thanks for being with us. Here's a look at the markets. You can see mostly green on the screen. The Russell is lower, but
mostly green on the screen.
Another week of gains, so it would be 4 for
Flux.
the Nasdaq and 3 out of the 4 for S&P and Dow. Right now, the S&P is back well above 4,000 at 4,042, up 26 points. The Dow is up 115 points, 33,859. The Nasdaq.
You're trading on a 30-minute chart?
11,972. And
what,
the
like 30
Russell
moving average?
is up 1 point at 1891. For some of the stories in the markets that we're following really closely, we welcome in Renita Young, senior markets correspondent here on the
GME is
TD
coming
Ameritrade
down.
Network, to take a look at Tesla.
It's
Shareholders
glorious.
feeling
Look at that
pretty
drop
good
on
this
GME.
year so far.
Let's
Some
get it down to
latest
10.
news on earnings.
Yes, Tesla definitely getting a lot of love today. You can see shares rising, and it's on record quarterly earnings, a top and bottom line beat.
Got a lot of making up for in all my crappy futures trades.
It's still on track to start beginning
GME gets to 10 in the next
later this summer.
2-3 trading days.
See vehicle delivery growth
it will help a
begin
lot.
to slow. Earnings per share came in at $1.19, beating the $1.09 estimate. Revenue was a beat at $24.32 billion. It saw 37% growth. And so remember back on January 2nd, when we saw that deliveries were at a record last year. However, they still missed that annual growth target of 50%, but markets don't seem to be punishing Tesla for that today. And so as we know that Tesla's responding to a lot of the higher interest rates, diminished brand popularity, and stiffer competition with slashing its own prices to make those cars eligible for the tax credit and boost demand.
You're day trading with 30-minute candles?
Are boosting price targets like Citigroup, Bank of America, and Wolf Research.
Yeah, without a doubt. I mean, we had on Tasha Keeney from ARK Invest. She had a $500 target, and that was just if it stays in the EV world. And if it goes into the world of autonomous ride sharing, she was saying $1,500.
Oh, yeah, that's right.
By the year 2026. So she's certainly on the high end. Tell me a little bit about Southwest
2026.
Airlines. Different story here.
Totally different story. Southwest not getting the love today. Those shares are being beat down by less than expected.
I'm not in HLBZ right now, but I might look for a re-entry.
Expected a loss. The loss was worse than expected, and it was
or maybe
likely
GNS.
Of that December, that 10-day period.
I know more, and I like HLBZ more as a company than GNS.
And adjusted earnings per share came in at a 38-cent loss versus an expectation of a 3-cent
doesn't
loss.
matter.
Revenue was in line. It grew by 22%. Now, these disruptions.
The catalyst for both of these, though, GNS probably has more of an opportunity
pre-tax profit in the quarter by
to move on that.
$800 million, and extra costs and revenue left Southwest nursing a net loss of about $220 million for the quarter.
Retraces and rips. Yeah, kind of that
profit of $514
extended
million
hump
the year prior.
Into another trough.
So both of these things, or all of these things,
we'll see. It's really strange because that's such a long time frame. Then if we're somewhere here, then
quarter ending,
you know, that's like another month almost before a bottom and a rally. Well, maybe this will be accelerated.
Tesla and Love today. Thank you.
Thanks.
See, because this bottom was much quicker also.
Johnson Wealth and Income Management.
Right?
Thanks for being here.
See, this bottom, this lasted like...
is the wool over our eyes? Because we're going to have another winning week
it lasted
on
like
Wall
2
Street.
weeks. This was
It
2
could
days.
be. You know,
so
we're an optimistic lot, and
there
I
are some
like
differences.
seeing the numbers. I know that it's super exciting.
That bottom
when you
looked
see that,
closer to one of these
the
bottoms,
S&P
but
500 is
turned
up
out it
5%,
wasn't. Unless if
NASDAQ is up
this
by
would be
almost 10%.
this would be
super
awful. But unless if this bottom was this bottom or this bottom or this bottom or one of these bottoms before we rip, and our rip just happened. That would be freaking depressing. And the scale is just so much smaller. That's actually kind of crazy to think about. Actually, what? It does look similar to the double tops we would have here. This one's a little more spread out. You can't even, like, for me, I can't even fathom, like, this was such a big move before. How could it be such a small move? So see this? See all those double tops? What if this is that? That would mean very low. If this was it. If this was the whole... Oh, man. I mean, what was this? 40%? It wasn't terrible. It's 42%. Oh, my gosh. So this was like one of our smaller ones. It was 81. If you go from here, still 70. That was a big one. That's why I think it's more like this area. There was like this right here, because even this was like 40 something. That was 53%, so more likely for that, but that little double top almost looks like one of these double tops. These are all... Oh, that one wasn't that big. That was a wick. Wait. Where are we? What a strange time on here. Huh. That one also wasn't that big. 48. Everything about our downtrend has looked just like this, though. Even with the little rocket. Downtrend we've had for 3 months, 4 months. Or maybe we're just repeating this again. Right here. So I'm saying, like, it all was dandy when GME held that 1940. Like, all right, charts repeating, and really just before the split, like a lot of recognizable patterns. This was kind of a throw off though, when we rallied up and then consolidated a higher range coming into the split. Then after the split, it looked like one of our more typical pinches. This was a strange meltdown how it worked. This was strange how it consolidated such a tight range for so long. You bought dips on HLBZ? Nice, yeah, like I said, I mean, I like the company better, but fundamentally, financially, I don't know which one's in a better position. If you're comparing them, like, GNS had, whatever, 1,500% move, and HLBZ has only gone up, like, 200%, then you could say, oh, maybe it'll go up another bit, but not necessarily. You don't tend to believe that? I know, I don't think this was it, but this double top, and we're getting a divergence here, which is the same way I called tops up at these other ones. Did it have one there? No. This one back here was the big one. Yeah, this was the big divergence, signifying a top. I guess it only happened, oh, it happened here too. There's 3 of them on this one. I remember that was such a big deal. I was like, what, it did 3 times? This is the first time I'd seen 3 divergences. Now I've seen like 7 on GME before, or it should have reversed. But they were much smaller. These are on dailies, and with this much volume and stuff is much more pronounced. Say you don't believe it, but you gotta be open, because I didn't believe we'd be in 15 anymore. If this was, that's the point. If this was one of those rips, that's where we could go way lower, right? I'm gonna start looking at those percentages. Then you're talking like Bob numbers. It's 50%. Not quite Bob numbers. Bob's crazy. That's $10. That's kind of that range. That's kind of where I feel like we'll find our final support. I don't know. Yeah, I mean, it's definitely seeming different. Like, this is the closest we have is this, but it's still not perfect. I mean, this consolidation time was much shorter than this one over here. And then we just haven't discovered this part of the chart yet. If we're here, because we haven't had a rally, so we don't know what if it's a double bottom or what. So we're just gonna have to, I guess, just follow some TA and I don't know.
So much more here on the watch list.
No, Daddy, no. My cost base is like double that, Ruthless. It's no problem. That wedge, man. The top side of that wedge is powerful. Yeah, so I mean, if we're respecting that same line, you could draw it kind of anywhere. I kind of had to clip both of these for this one and then kind of the bodies on that one, but that kind of that one, and then it did end up hitting this one too. For the section where I drew it from. And maybe it's just the first leg up to a move to 25. And it's not really recognizable to a previous pattern yet. That would be if SPY had a rip the next couple weeks. And it could. I mean, we have PCE tomorrow, PAL next week. That would be SPY probably filling this gap at 417. Maybe just 411 up here, this resistance. Tomorrow will be kind of a big day. It could be important to set the trend which way we're going. If it's pretty green, then probably be green the whole next week, which will bring it up a lot. At least until PAL on Wednesday, but maybe even through PAL. Limit overall liquidity factor in this discussion. I don't know. I'm not really including that in what I'm looking at. What we've seen on bottoms though has been a lot more volume, increased volume signifying buying, where we never really got that on this bottom, which is one reason I didn't think this was it. You know, increased volume and then the rip had more volume. That's another reason why I wouldn't think this would be necessarily a rip. The volume never came in on it. So yeah, that's probably not a double. That's probably not one of those double tops because we just never got the volume. So it could be something like this. This kind of brings us back to this point again. We had some volume showing the bottom, and then now we're just gonna do this. Which actually, yeah, that will actually bring us right into earnings into March. That's insane. So that actually, oh my gosh. I mean, the date is really close to even when it was here. Because this was it last year, January 26th. And earnings is March 17th. So probably not a rally till after earnings. Or maybe just do that. Just do that post-earnings rally. Although this one didn't have it at all. Had a little one, but that was weird. But we're going to be due for this next earnings to have the rally. Yeah, see, that was like this earnings where it didn't have a rally. It's really not until this one, because this is once Ryan Cohen moved the earnings date up a couple weeks to coincide with when the rip was, to have it after, have the rip after the earnings. But see, it's not every earnings. But I think since the last one we didn't have it, probably this one even had it of sorts. Yeah, I need to see the volume increase. Maybe the price come lower. That's what I'm thinking for now, I guess. Drew new line on the daily from the bottom of 1451. Uptrend confirmed. Like a, what kind of line? Like an angled line? Like a wedge type line? Like a Dorito? Nacho Dorito. Like one of these? Straight up. So you drew one of these lines and confirmed that we're gonna rip. 1541. Yep. Straight up line. We're going up. Okay. Straight up. On the weekly, it's kind of building a little bull flag. With those topping wicks, though. Big old fatty Dorito. Oh, BBY felt the sell-off there.
Tone to the remainder of the earnings season that could be encouraging, even if overall numbers still have a bit further to fall.
So also, I wanted to turn your attention over to China. A new year, a lot of new flyers on the airplanes. Tell us about that.
Yeah, so we know that economic activity has been picking up in China since they've reopened. We can see it in subway and road traffic, a lot of other ways. But we are now on holiday in China, of course, with the year of the rabbit here, the Lunar New Year kicking in. Everybody's traveling, but here's what's amazing. The amount of domestic air travel within China may now hit a new all-time high, actually above the January 2019 pre-pandemic level in terms of the amount of activity, amount of people flying around in China, actually pushing China to now be the #1 country in the world for flying, for the number of people flying around, actually surpassing the US here for just about the first time. So interesting to note here, despite the concerns about catching COVID, about hospitalizations, about all kinds of concerns, doesn't look like there's any slowdown here based on independent measures of activity within China. Not getting these from the government. These are from independent aviation industry tracking services showing this rebounding boom in domestic flying activity.
And in the meantime, we're seeing different sectors showing some weakness, right? Housing, for example, we had on Dolly and Jenny Lenz yesterday. They painted a pretty tough picture when it came to housing. And at the same time, we had a guest on talking about a survey about folks and how they're going to be spending. It's so confusing to understand where our economy is headed and how people will behave and spend.
Now we're in kind of what we're calling, by we I mean here us at Schwab, Liz Ann Saunders, myself, Kathy Jones, kind of a rolling recession. Different parts of the economy, different parts of the world entering and exiting recession at different times. It's very different than the everything everywhere all at once recessions. I'm saying that because 11 Academy Award nominations for that movie. We saw that kind of recession, everything everywhere all at once in 2020 and 2008 and 2009. Everything falling at the same time, everything rebounding at the same time. Now it's different. We've seen the manufacturing sector, particularly here in the U.S., slip into recession on burgeoning inventories and slower demand. But just try and book an airline ticket, right?
That's it, now gas, go, baby.
Travel is booming. So there's different parts of the economy doing well, different parts are weakening,
Not
like
shaking me out.
housing. And that means that depending on which economic piece of data you look at, you get maybe a different picture. I think the overall picture is one of a modest economic downturn, a mild recession, but one that's going to be very difficult to determine when we're
movie?
emerging from, because again, different
the name
parts
of
of the
it?
economy entering and exiting at different times.
They're pretty good.
Right. And what did you think, last but not least, looking at just some economic data? I know you've been watching a lot of the data out of Europe, but we've also just gotten in GDP and durable goods. We're waiting on it. We got jobless claims. We'll wait on that jobs print next week. What are you looking at most closely when it comes to our prints here at home and what's going on in Europe?
Well, I like to look at not so much whether data is good or bad, but whether it's getting better or worse, because that's what the stock market tends to key off of. And what we're seeing here is, no surprise, European stocks are
that was the name of the
outperforming US
movie?
by a pretty wide margin here over the last several months.
I feel like I
and what
actually
we're seeing
saw
here
that.
is the
I don't remember
economic
that title.
surprise index for the
That was
US,
a phrase in a
emerging
movie.
markets, and Europe, and that's in green, and Japan in red. And what we can see here is most of them around zero, which means economic data is coming in pretty close to expectations. Maybe got a little upside surprise by some GDP here today in the U.S. But that green line, that steady climb, is showing that data is coming in consistently better than economists forecast in Europe, and by an increasingly wider margin. So economic activity really improving in Europe on a very mild winter and adequate energy reserves. And we're seeing here this quarter 10% earnings growth in Europe versus a decline of 3% in the U.S. So continuing to support European equities.
Sure, that improvement is notable, and they really were lucky with a mild winter, as you noted. Jeffrey Kleintop, wonderful to see you. Thank you, of Charles Schwab. Thank you, Jeffrey.
Wait, winter's not over? January 26th.
Aerospace, the aerial firefighting company, just completed a
Oh, gonna get cold. Nat gas gonna go up. SPAC? Firefighting company? Just de-SPACed? Oh, nat gas. Nat gas moving up. Let's break this high. We've got many points to go up. We're at 280. Go back up to 7. He's moving up still. Gonna be testing that high of the day. Dude, are those daily calls? How are you not losing to theta? Tip 1, take win. Dude, I gotta see these plays. Share it in Discord. I want to see this daily contract that you've just been holding all day.
team. I love that you're doing this, and your leadership is obviously unmatched here with what you're doing. You yourself, a former U.S. Navy SEAL officer, recipient of the Bronze Star with Valor and a Purple Heart, and your team has many veterans on it, even an Afghan fighter pilot. Tell me a little bit about why it's so important to have fellow veterans on the team. I absolutely love this.
We're a 100% veteran-founded company. I was actually living in a tent when we started this company here with my wife, who's also a Marine veteran. So we started this company all recognizing the power that an air-ground task force has in a tactical scenario. And us in the special operations community were some of the pioneers of taking that aerial surveillance capability and maximizing its effectiveness on the battlefield. So having that mindset around us, most importantly, that mission-focused mindset, has been critical to our success.
Are they negative?
And has been the key ingredient to our growth. And you mentioned Sammy, our Afghan fighter pilot.
Yeah, if you don't have 25,000 in your account, tree,
summer 2021, a lot of us
only
had
do
friends who were still
three
stranded
trades
there,
a week.
and of course that coincided with a catastrophic fire season here in the U.S.
You have to hold it overnight.
So as we flew fires by day, we were trying to evacuate our friends at night, and one of our friends happened to be Sammy, who was an attack pilot for the Afghan Air Force. We got him out of Afghanistan and immediately hired him here as one of our surveillance pilots. So it's a great story of how we were able to get someone out of Afghanistan and take their critical skill set and apply it to our very important mission here.
Yeah, it's absolutely unbelievable.
She's blown
Tell me
away.
about the Super Scooper planes and how they're used.
It's a beautiful plane, as you can see. It's unusual. There's no other plane like it in the world. It's purpose-built for aerial firefighting. The manufacturer to Havilland Aircraft out of Canada. It's been a Canadian-built aircraft since its inception back in the 60s. It's gone through various versions. Currently, the CL-415 EAF, which is our version here, is the latest iteration of this family of aircraft. And again, the claim to fame is they are the only aircraft ever built specifically to fight fires. They come in, and instead of landing at an airport and loading up with water retardant, which is an important aspect of the fire apparatus, these aircraft go to the nearest body of water and scoop the water. Rivers, lakes, bays, the ocean, whatever's nearby. It only takes about 10 seconds to scoop a full load, and immediately that aircraft returns to the fire and conduct a very precise direct attack on the flames. These planes are purpose-built for direct attack missions. That means coming in, dropping water on the flames, and putting that fire out. They can put more water on the fire than any other aircraft in the world by far. In one day, some of these aircraft can get up to 100 drops in a day. There was one fire last year where this particular squadron of aircraft we're around right now put about 2 million gallons on one single fire over the course of a couple of days and effectively helped corral that burn. So they're the big guns to fight a fire. If there's a big incident and you need to put a hurt on it fast, this fleet's the best thing to do it with.
Congratulations to you and the team BAER. We're going to be watching for it. It's great to have you on, and thank your wife as well for her service to our great nation. I'm a true patriot. I'm so proud of all that you are all doing, and of course, great work, much needed.
These poor guys.
Thank you, CEO
Thank
and
you,
Director of Bridger Aerospace.
I'm gonna
Thanks.
get wrecked with the SPAC.
Coming up next, we will talk all about real estate investing.
GME is bouncing up a bit here. Why do you need to go public? A money grab or what? Yep, low volume today. That gas broke that high. Ooh. Going, baby. I haven't put a stop loss on it, which I don't want to.
Tune in 24 hours a day.
Rule number 2.
We have about 90 minutes left in the trading day. I'd like to get a market update from Ben Lichtenstein, Senior Futures
Lichtenstein
on the network. What are you watching here, Ben?
Hey, Nicole, good afternoon. Green arrows across the board headed into this Thursday afternoon. All 4 of the majors enjoying positive territory. You just pointed out, I noticed the SPX today above 4050.
Oh, thanks.
Dow Jones Industrial Average to just shy of 34,000. I saw the Russell traded above 1900, and the NASDAQ, which is leading the way percentage-wise, up on the day by about 1.5%. It got above 12,000 briefly. Now, we're off those extreme highs by not by much as we head into the afternoon session, and this really just caps off what we've been seeing over the last few days in terms of the big move up. Today, kind of culmination of some risk-on sentiment. We saw some earnings which were relatively, easing to some of those concerns in terms of fourth quarter results from some of the companies reporting so far today. 24 S&P 500 companies. Eco data even coming in pretty strong. Some housing numbers, Nicole, the jobs report showed a really robust labor market here in the U.S. and for the most part, some of the inflation data seems to have eased, continues to ease. So, I noticed the move today has all 4 of the majors convincingly above the 50-day moving average, and last I had seen the NASDAQ, the only one of the 4 is still below the 200-day moving average, so I've been watching that. But, a reflection of that bid, that risk-on tone that I had mentioned, some of the optimism tied to eco data and earnings. You got the VIX below 19 today, and, don't lose sight of some of the data due out tomorrow, but yeah, very overall positive tone as we head into the end of the week. Still short of the December highs. I think that's key to remember. You've got to watch for those. The S&P is up around 4,100, but not by much, that's for sure.
Okay, thank you for that.
Five
and then
moving
a quick look
up
here at
more.
Gold. What's
Wanting to
behind the
maybe
drop
test
here?
the highs on the day.
Well, with stocks rallying, we've got the dollar, which has come off significantly. Oftentimes you see that very well-defined inverse correlation to the
GME
US dollar
still
and gold, and it's been playing out as of recent.
Pacing
We saw
it to the
gold
downside.
today to near 1950, traded to within about 20 cents of it. And, I noticed it was 1949.80 was actually the high that we got up to today. The dollar traded down to 101.29. We've seen rates coming off. I mentioned that kind of risk-on tone that we've
held up
seen.
really well.
Look at the move up in gold there.
170%.
You're looking at the left side of your screen, it was up around 2,100, down to the middle where we traded down to we'll call it 1,600. We saw a bit of a triple bottom there. You can see that's pretty well defined. And then the rally back basically through halfway from the move that we saw to the downside last year. So again, this coincides with the U.S. dollar, which has made its way from, 115 was the high last year. We saw it back down to below 102 this week. Yields also coming off, right? The 10-year yields recently taking out the December lows, followed through somewhat limited without participation from the 30, but 10-year yields, the TNX did take out that low around 3.5. So just pointing out a couple factors that have contributed to the upside. But yeah, I think a big part of this is some of the weakness we've seen in the dollar.
All right, Ben Lichtenstein, thank you so much for that. Great to see you, Ben. Appreciate it. Let's switch our focus right over to real estate investing in a different way. You'll want to hear all about this. Joining me right now, Kurt Carlton's with us, president of New Western.
I saw people talking about it on Discord.
Being with us. So when we think of real estate,
and their 10Q shows that they pulled shares out of an ETF or something.
Completely different, fascinating, and it's working.
I'm taking it wasn't bullish
because
the stock hasn't moved.
A little bit about the company.
So New Western is a marketplace. It's a marketplace where real estate investors find houses to rehab. Generally independent real estate investors, there's 150,000 of them on the platform looking for houses. And we trade a house about every 10 minutes right now or so. And we operate out of 51 markets around the United States. So it's very much a large, high velocity national operation.
What's fascinating to me is how someone goes around, they can find the property, they have to secure funding for this property, and then they have the opportunity to fix and flip it, fix and rent it, but in the meantime, they are making money along the way, and in many cases, it can then become passive income, right?
Sure.
Tell us a little about that.
Well, single-family real estate, being a generator of passive income, that's been around forever, right?
Right.
And there's been a lot of interesting news lately about the publicly traded REITs coming in and buying rental properties. And although that's news and that's different, the market is firmly owned by the independent real estate investors. So 99% of the houses still in America are owned by independent real estate investors. Clients like ours that come in, they buy a house, they maybe do a value add, they put it back on the market.
Solopreneurs, right?
Yes.
I mean, that is a great phrase. I saw that in one of your reports, and these are career rehabbers, and they take these properties so you don't have to invest in a huge REIT. You actually can really guide what's happening with your money put to work. So another part of this report that I was looking through here is the young folks. They are very, very quick to do this. There's a lot of younger folks doing this. Tell me a little bit about the group of folks that are younger that are doing this.
So, you know, a new generation, a new playbook, right?
Yeah.
So we're seeing Gen Z, we're seeing a lot of new strategies, but, you know, you see this happening because of some large macro things. You know, we're missing 5 million houses in the United States.
Looks like we might.
Family creation has outpaced the amount of houses we've been able to make available. So there's lots of demand. And then on the other side, there's a lot of opportunity because there's 15 million vacant homes in the United States. So if you're someone that's looking for opportunities and you want to find a house to fix up, they're there.
Yeah.
And it's something that's not scalable. So it's not something that the government can fix directly or a large national institution can fix. So it comes down to these individuals, these solopreneurs that really find these houses and bring them back on the market.
And they can find that at New Western, right? I mean, you're talking about flipping homes. You said you see homes selling every 10 minutes or something. Tell me about that again. And what's the range? I mean, how much are we talking?
Our houses that we return to market are generally about 30% less expensive than a traditional house, so we're in this affordability band.
Right.
These are the types of houses that we're working with.
40 pages.
Right. Okay. So at this point now, a young person, these are people that are 18 to 29 years old, but we're not leaving anybody out. These solopreneurs are
Quick glance,
of
and
all
it's not
ages.
good.
But if they find the property they like, how do you get the funding? What are some ways that you would suggest to somebody?
It hasn't
who
moved the stock.
So that's the second biggest challenge that people face is
good,
finding the
I
financing.
guess, if
so
it's bad.
what we've done on our platform is we've incorporated a lot of the local lenders, because these are generally not, you know, you're not going to go to a national bank for this type of financing, right? It's specialized financing for fix and flip and these things. So we've made that really easy because that can be a little bit of a zoo trying to find the right lender.
It's really, so you get a regional bank, a local lender, a consumer-friendly bank in the local town to help you out. What about the pandemic? There were these hot spots and things were running up and they became astronomical in price, unaffordable. Where do you stand in the different regions? What are you watching most closely now?
So the pandemic has affected certain markets, Austin, Denver, things like that. They've really ramped up and they've had a little bit farther to fall, right? But the real demographics behind housing started before COVID. Really, this is because there's an overwhelming amount of demand for homes, and we just don't have enough homes, enough supply of homes that we've brought on.
Sure. Labor, that's another big cost, right, to put this to work? How do you find the right person, the right people, or right team?
It's a challenge. It's a lesser challenge than finding the property and the financing, but And that's why this is so localized, because you can imagine how difficult it would be to scale that across the nation. So this is where local real estate investors, solopreneurs that operate in areas, neighborhoods that they know and understand, and they can find labor that is very local.
I'm surprised to see the investor confidence, because I think that confidence has been waning. People lost a lot of wealth in their 401ks. They lost wealth in their value of their homes. They're not getting money from the government anymore. People are feeling uncertain. But in this case, you're saying the results show investor confidence is remaining pretty strong. Why is that?
We do that survey all the time for our own information, and when we see something interesting, we share it with the world. But things are changing. We're coming off what everybody called the Great Resignation, and now we're going into this, what we call the Great Renovation. So we built a ton of houses 20 to 40 years ago, and they're all reaching this phase where they need major repairs beyond what a typical homeowner wants to do. So there's all this opportunity for these solopreneurs to leave these 9-to-5 jobs and get into a career that they have more control over, and they can, and a more rewarding prospect.
And you said, this is across the country. This is a national venture that you're doing here. What's the final thought here when we talk about what New Western brings to the table? Because this is completely different than what people are thinking. People in their minds say, oh, I would love to buy a house and flip it, or you're helping beginning to end, or which part of it are you helping with most?
We do a small part, but a very important part, which is identifying the asset. So if you think about all the real estate,
finding that property.
Yes, and that's really all we do. The investor does a lot of the heavy lifting and the renovation and all that, but it's finding the asset that I think is the real challenge for investors.
Right, and valuing and saying,
Mark is getting on board.
Probably a great one for you, because it's probably not overpriced. As you said, it's probably at a more inexpensive price, and it gives you the opportunity to turn it around. What a great
Big
conversation.
Dip. Whoa.
President of New Western. Thanks for joining us
Maybe
and explaining to us all
that
about
10Q was not
way
liked.
to invest in real estate and have appreciation and some passive income.
That would be
too.
pretty delayed.
Thanks for having me.
Great to see you. Coming up next, to dive into Tesla earnings. The stock's on the rise, and Elon Musk says the demand is real. Let's look at what's going on here with Tesla coming up.
Yikes. Is that just a delayed reaction to that 10Q? Oh crap. That's not good. Can't wait for after hours. Yeah, this has got to be reaction from that 10Q. I don't know why it was so delayed. I guess there probably wasn't any algos on it. It was just manually read. So, something in there is definitely scaring. This thing's gonna get halted. Is it halted? Oh my gosh. Holy crap. Nothing is ever delayed. Unless if they were manually reading it. Fishy is good. I like fishy. Give me hope. Oh my gosh. Yeah, it's halted. It's not halted pending news. It's a volatility halt. Quit being an idiot, Hurricane. Dang, GME's getting wrecked with that. Wow. Last Friday, no, it was Monday that GME Rallied, I think, yeah. I didn't realize how much of my TD portfolio was BBBY. That's scary. Oh, man. Oh, man, Jimmy's feeling it, too. AMC's getting some. Turned out to just be a boring day, and we get freaking BBBY. Holy crap. Let's put all days be rewarded for that. Media saying bankruptcy rumor again? How would it not be from that 10Q that just came out? And we didn't get a reaction like this before. Let me see. I mean, where was that? It was bad, but it was nothing like this. I guess it was after hours, huh? So that was pretty significant. 21%. 12%. This just dropped. Just dropped 17%. I think my portfolio is actually not displaying it right. Maybe it is. We'll see when it gets unhalted. I gotta look. I don't. That'd be weird. Maybe. No, yeah, it's not displaying it right. I don't think. That's so jacked. We'll see when it comes back. I don't think that math is right though on my brokerage. Might be, which is scary, but saying I lost 13 grand on it today. Just on these shares, on 2,400 shares. Not on 7% move. Media saying bankruptcy rumor again. Nothing new. Well, if you wanted to buy the dip, here it is. I mean, maybe it'll dip more, but okay, yeah, it came back 1,500, not 13,000. I was like, what the heck? That was weird, but it might soon be that if it keeps going. Oh, GME getting blasted. Well, I guess they are still in a basket of sorts. You just have to see the volatility for it to move them. So that's good news for the upside on GME if BBY does have another squeeze. There's some volume. I'm trying to think if I should position more down here. I'm already so exposed to it. $2.40 was the low. So it filled that gap. Not showing up. That's not showing up on Webull. It literally hit right at the gap. $2.41. Oh, never mind. That's up here. Yeah, okay. So it hasn't quite filled the gap all the way to $2.80. Look at that rebound. That's a gnarly stop loss hunt. If it didn't get you on the downside because it gapped and halt, it'll get you on the upside. Oh man. All those stops just got triggered. So Don, you're sus on it because it wasn't right when the 10Q came out, but you still think it's from you still think it's from some wording in the 10Q? Yep, there you go. GME 1938. So that's that double bottom on the yearly. That yearly low, the 2-year low we've had. I'm not optimistic it holds that though this time. Up 50% on those puts. I wonder if this is the time to sell them. Maybe I'll sell them and make them free. Since they are just next week's, I kind of wanted 2 weeks on them. And it's a huge position. I put $1,500 on those puts, so I'm up $700 on that. Huge bounce though. You're down 30% on it. Who's buying? I don't know anyone that's selling, so I mean, this could have a continuation. Like, this might not be over today. It could definitely leak into tomorrow. I want to hold my puts a little longer. Got 15 of them. I'll just sell half. I'll do 8. Take a big chunk off the table. I'm actually surprised it puts in to go up more with the velocity that came down. Oh, yours expire tomorrow? Yeah, I have next week, which was less time than I wanted. Closing all brokerage accounts for today. This is too much to handle. Yep. Just about 1,000 more. Prove it, Hurricane. Yeah, it's starting to, the puts are starting to lose value on GME. Bounce. I'll leave the order there though. I think it could come down still. BBY is coming down still. Wow. That was crazy. Yeah, I looked at my TD and it basically halved my account. Like, what? What just happened on that haul? That'll get you scared to sell immediately. Market order. Sell everything. What fills you with the ask? He was not looking like party before they got kicked out of TC. Get out of here. What do you think is sus then? Why if it's nothing new? What's the reason for this? Got a little bit more to fill in that gap. Yeah, it's nice to just see some volatility back in the basket, though, honestly, and that these are still tethered. So that was quite a bit of insight we just got there. Cost move. No. Express. Nope. Need more volatility to maybe see those move. Maybe someone already knows. Well, they wouldn't have this effect on the market. Like, was there a huge option order that just made it crash? I don't think it can do that. That looked like algos for sure. Still no news update on here. These guys talking about it yet? Probably not. They've already gotten their clicks from talking about BBY going bankrupt. Yeah, they're all still in the same basket. Still confirmed. We put orders like an hour ago. I don't know actually. Their 10Q came out today, but it was hours ago. So, Don, where'd you get that info? Did you share it? Let me see. I was assuming it was something from the 10Q, but it's so delayed. So maybe just media, just, I don't know, spinning it, short and distort, pushing it. I don't know. BMX says it's officially entering Chapter 11. Do you have any source on that? Flurry of articles. I don't have any evidence that they said they're going bankrupt. No. The media has been saying they're preparing to go bankrupt for, months or whatever, weeks since this drop. A default notice from JP Morgan? No. They're not even due until February 1st. They're just their interest payments. Default, they wouldn't get default notice. They haven't even. Bed Bath & Beyond says it does not have sufficient resources to repay the amounts under the credit facilities. This will lead to the company to consider all strategic alternatives, including restructuring. Yeah, that's old. That's all like old though, right, Dom? That's halted again. Holy crap. That doesn't. None of that seems new. So now that the volatility left, it's still pulling GME a little bit, but not like that first initial dump. AMC's coming down with it. I'm gonna hold mine. I've got till next week. This is just getting started. Seek reductions in rental obligations. Not have sufficient resources. They said that on their 10Q. They're seeking all alternatives. Yeah, I don't see. I mean, I haven't checked HLBZ. Did it drop with this? Or is it rallying? No, not doing anything. Buying 1,000. Bunch of clowns. None of it is new. That's why I think this sell-off is just a well-done short attack and likely triggered the crap out of stop losses, cause option sell-off. Yeah, yeah, it seems like it. From what you've shared so far, I don't see anything new. So it is exciting with the volatility, especially if it's fake, as far as the reason for the dropping. That just don't they know that makes us more bullish? Anything that seems suspicious just makes us bullish. Has the IV gone up a lot though? I don't know if I'd start getting calls yet. You can wait for it to settle down. Holy crap, look at that IV. So next Friday. This is about where it was, I guess. It's halted. Oh, I have a delay on here. Let me see. Let me see on E-Trade. Because even your calls are gonna, the IV's gonna get pumped on them. 351. Yeah, here's your chart for the calls. Let's see how much it pumped on that little rally. Just put an order in. They've come down in price. Haven't gone up yet. Another halt. Oh yeah, they're really laying it on us. Do you think they'll ever allow AMC GME to squeeze? No, they're not gonna allow anything. It's gonna have to be forced. I mean, I don't know. I think the squeeze will be a long-term Tesla type at this point. I don't think we're gonna get violence like we did in January. Not to that extent at all. But 10x from where it is, sure, yeah. Just won't be in a day or two. Someone sold 1,000 217.45 calls. You think that was part of it? Those didn't have any delta though. 45 calls. That had zero effect. $217. 45 calls. Yeah, 0.03. Those are worthless. BBBY is they're tanking it. It's halting and tanking and halting and tanking. So it's actually held. Oh, I see what you mean. Like, okay, I guess that's one print. I mean, yeah, okay. That didn't cause the move on the stock. You're just saying someone was holding him this long. And this news that came out all of a sudden, they're like, no, I don't want him anymore. I'll get my $12 back. BBI puts, nice. With margin calls. Yeah. Yeah, but that's going to be... Someone's going to bail them out. A bigger fish is going to eat it up and subdue the price and slow it down. You know, you saw squeezes on Tesla on its gamma ramps and little squeezes and on its way up where it had crazy moves. Someone already knows. Bankruptcy after hours. Didn't they pay something that was due today though? Why would they do that? $4.5 million shares just bought. Stop. They did default in their credit facilities with JP Morgan. Murdoch, are you in chat? I mean, defaulting on credit. It's now power hour. Wonder if the SPY is going to start dropping too. Not that these have any weight, but just kind of a foreshadow. GME's trying to hold on. Yes, I do, Brian. I need, I guess, more info on what's in the 10Q and oh, reiterating. Okay, finally, Seeking Alpha says that they're reiterating financial obstacles. That's it. So the drop, I mean, yeah, maybe someone knows. Can't even get past them. Hold on. Maybe someone knows. That is possible, of course. But why were they paying off? Weren't they paying debts, or didn't they pay something today that was due? Stop. Stupid Seeking Alpha. Right before CNS close? It's like 20 minutes before. I don't know if they can. Yeah, from that article, they're just reiterated stuff we already knew. So the sell-off, I don't have CNBC. I've got this, and they don't talk about stuff like this, I don't think. Yeah, they can halt it whenever they want for as long as they want. They're trying to explain this halt with, or this drop in price with reiterating news, even though it's not new. So you're saying someone knows and they're dumping it, and the media is trying to explain what's going on here, and their explanation is just false. That could be. If they did default on their JP Morgan, okay. Murdoch shared something. Certain events of defaults have occurred under our amended credit agreement, as a result of which loans outstanding thereunder have been accelerated, among other things, and our lenders may exercise remedies against the collateral securing our obligations under the credit facilities. Our obligations under the ABL facility and the FILO facility are secured by first priority liens on substantially all assets of the company and certain of its subsidiaries, subject to customary exceptions. On around January 13th, certain events of default were triggered under the credit facilities, result for failure to prepay and over advance and satisfy financial covenant, among other things. When did this come out even? As a result of the continuance of such events of default on January 25th, Administrative agent under the amended credit agreement notified the company the principal amount of all outstanding loans under the credit facilities together with accrued interest therein, so tiny, the fee applicable premium and all fees including, for the avoidance of doubt, any break fine. And other obligations of the company procured under the amended credit agreement are due and payable immediately. The company is required effective immediately to cash collateralized letter of credit obligations under the credit facilities, and effective as of January 25th, which was yesterday, all outstanding loans and obligations under the credit facilities shall bear interest and additional default rate of 2% per annum without access to a revolving credit facility. We may not have the necessary cash resources for operations, and we may not have the cash resources available to repay accelerated obligations following the notice of acceleration received on January 25th. Refinance such indebtedness on commercially reasonable terms or at all, or cash collateralize our letters of credit, and lenders under our amended credit agreement may exercise remedies against the collateral securing. So, sounds like someone, where did this come from and when did it come out? But it sounds like someone's trying to get their money back, basically, from BBBY. They're basically margin calling it, more or less. Is that what that is reading like? Gosh, my eyes are watering trying to read that thing. It halted up. Oh no, you're in short, Dink. What's your what's your take? What's your news? What happened, or is there anything new? Is it just old stuff? Because I've still got a lot of exposure. Yeah, it's halted up now. I know you're always a bear on BBY, but is there anything, did you see any new evidence or anything new that came out, materialized? Margin calling? That's kind of what that red looked like, but I don't know where that came from, who that was from, or when it was released. Sure what I read? Yeah, I'm trying to figure out where that came from. I asked Murdoch, where did this come from, who from, and when was it released? Oh, in short, BBY is after. I thought you were saying you were shorting it. Spy, meanwhile, is hitting at the high on the day. But you say bye bye bay is the only value to have if that goes. Where's that gonna go? What do you mean? Why is that going somewhere? Oh, nice. You had some puts on it, huh? Jeez, you guys are going crazy buying it up. How did he scoop it up with zero debt? Because of the default? I don't. It says a 10Q just released. Another 10Q just released? Yeah, Murdoch says that was. He just says 10Q just released. I don't. Did you bring two of them? Or they released two of them? Yeah, it's still dropping. High more view after halt. Well, they're still in the basket, so I wonder. Maybe that doesn't matter. Well, I haven't closed any positions. I'm just kind of holding, trying to figure out what's actually going on. The only tangible thing I've seen is that screenshot, but I don't know where it came from, who it came from, or when it was released. Yeah, so it was delayed from the 10Q, which Don, you think's impossible. That seems like that's what happened, unless if it was just that was their excuse for dumping it. Dropped at 240 when the filing was released? What the heck? That's not when it was released. It doesn't show doesn't show a time when this was released, it just says today. You guys were talking about in Discord like this morning. I guess like all their closing stores and all that, like what's the point if they're just gonna file bankruptcy? Like, deal with all the liquidation then. Puts the shares in the basket. Well, let me take this brief moment to thank you guys for your likes. 44 of them. Appreciate it, guys. Still trying to figure out what's going on with BBY. If you have anything, let us know. This doesn't seem like from 10Q that was filed earlier today. Yeah, that's kind of my suspicion on it. Yeah, I like the volatility. That is a gift if you had weeklies. That's awesome. Okay, my covered calls that expire tomorrow, they only lost like 15% of their value from that drop. So that's why jumping into calls when there's tons of volatility doesn't necessarily make sense. Use a bye-bye baby buyout. I mean, they would have tried to stave off bankruptcy, so I could see them doing things, preventative measures, as long as they could, but yeah, it doesn't seem like it would be this close to it. I mean, they just announced more stores that are closing. Like, well, it didn't quite fill that gap. 2080 is what we need. I don't think GME is gonna buy it. I mean, maybe like a parent company, but it's not gonna be. I don't know. I don't think Ryan Cohen wants it anymore. I mean, he made that pretty clear. HLBZ is dropping. I gotta figure out what to do with my BBY position. Just cut losses or ride or die, man. Maybe too big to ride or die. I should maybe trim. Meanwhile, SPY is just continuing to melt faces to the upside. New high on SPY. High of the day, going to 408. Would they try to save up? Well, maybe they wouldn't. So then, I mean, what's the why are they closing stores and why are they paying? I don't know why they're doing that stuff. He said he didn't agree with what they were doing. And that goes along with him selling too. We have no reason to believe he has any interest in owning it anymore. The drop too hardy on this volume. There's the power hour melt up. Yeah, I mean, the volume was all just tied in with BBY. So when the velocity hit, it hit GME and AMC, but once the velocity cooled down, they could go their separate ways. NQ was released less than an hour ago? Um, so basically the interest is going to go up by 2% annually, right? That's what that's saying. Until they pay it back. So, yeah, they need to get bought out basically, unless if they can somehow do it organically. I don't know, but. But yeah, their loan provider basically margin called them, said, "We're scared. We don't like your collateral. Either close it out, it seems like, or we're going to get an additional 2%, I think annualized, which isn't much, but is that right? Is that what that little excerpt says? It's released at 1:32. Where do you see that? Yeah, back here. So that would be my only thought, is they were manually reading it. They didn't have algos on it. I don't know. And I don't know. Or someone new, like you said, and dumped it and the media's just using it as an excuse. Or who knows? Dip before the dip. Smart. Couple of GME shares for the dip before the dip. They were using BCG. I think he got all of them out. So is it 10:32? Then that is suspicious. Like, you don't usually see a market reaction that late unless it's orchestrated. Even if it's not algos, I mean, there's interested parties that would scour through that thing right away. I don't know, I might hold. Let's see. Let's see if I sold some. I could sell these. Let's look at the. I'm torn. I never had like much conviction with BBY. It was more just for the play. That's why it's hard for me to just hold it. It's just the velocity. That's what always gets you. Like, if they slowly melted it down here, it would be totally different. I mean, given I didn't want to come down this low, I liked the TA actually that it was setting up. That's maybe the problem. They had to kill that off because we had a nice support here by ripping 2.8, and then we had inverse head and shoulders. It looked like it was reversing. So they're like, nope. So it doesn't, I mean, it doesn't say, it says we might not. And it's not like if they don't, they're just have to pay more interest on it. Yeah. It's just so much legal jargon, it's so hard to understand. There goes SPY. Hurricane, are you still holding dailies, dude? There's no way that you're outpacing the theta. You must have had many other better opportunities to exit. Merger? I don't see anything in the 10Q about that, but I haven't read the 10Q. Seems like no one has until just a few minutes ago. Our highly trained legal apes are sifting through the paperwork. Stand by. Do we have anybody on BBY? It's not GME. I guess there's BBY on Reddit. Your fourth monitor. You can lose money even faster with that fourth monitor. I think it definitely could. It could get a huge dump after hour. I mean, yeah, like all seriousness, like this might be the end of it. I don't know. The wording in that is pretty grim. It's not certain for Chapter 11. It's saying they're basically laying out that it sounds like the credit facility that they use is basically wanting their money back, or they're going to increase their interest. I think 2% is how I understand it. Yeah, so they're trying to get more money out of them. You know, that's what you do as a lender. You try and squeeze your squeeze those that are lending from you, especially if you're starting to get uncertain or nervous they won't be able to pay. You at least want to make more money with that liability. So it gives BBY less chance to pay it because it's more now if it's going to be 2%. 2% annually is like nothing, but it is more. And there's no dates on here like when they have to pay by, I don't think. I don't know. Do you guys see any dates like debt due by this date or anything like that? I know their interest payments on it is due February 1st, right? So that's why I was saying they should have at least until then. There's no way. That's why I was saying they haven't defaulted. They haven't even come up to their deadline to pay the interest on it. So how would you default before that? But this looks like, yeah, it's the lender is front running the default and saying we want more interest. Anybody have any other takes on it? I'm not a finance expert. What? They halted it till the end of market? What brokerage do you use? BBY to the moon. Yeah, I mean they need to be able to borrow for sure for inventory. That's true. But I mean they were going, yeah, they needed to get bought out. Like yeah, they paid them out, which to me could mean they paid them out before filing this 10Q, and they all got paid. Right? $4.96 a share. All of that seems to go in line. When you say JPM default notice, is that this little excerpt that I've been reading? Use computer share to buy and sell? Wow. That is commitment to the Australian gang. Looks like SPY is double topping up here. I want this short, but I'm scared. Dang it. Wait, how's the other nat acid doing? Good. I don't know. I mean, Don, Dink, do you guys have any wisdom on that? The people that did get paid out, the insiders. Did they not legally do that if bankruptcy was coming or they knew of it or anything like that? Probably too much volatility for computer share. Let that be known if you have stuff in computer share. If there's a squeeze, might halt it until a certain day when it's less volatile. That's the same one that they had before? This little writing right here is one that they had before. But this has the date to the 25th. It's talking about yesterday. Yeah, that's true. It goes through a broker. There wasn't a dump like this prior to last squeeze, no. As long as they schedule the transactions. That's a good point. And they probably were scheduled, right? The vested shares, they were probably scheduled. They could have been scheduled years ago. That excerpt was pulled from paid file today. Yeah, but you said it's a copy of another one? Yeah, that's true. If it was a prearranged schedule, the scheduled time, it's just like with Adam Aaron. He was like selling out shares and yeah. No, like what Don Rose said, because it was a preordained time that they had these vested shares that they were going to expire or whatever. They were going to get shares or a certain amount of cash at this time, and it wasn't just off the cuff. Oh, hey, you guys want shares? You want cash? No, it was when they got vested. It could have been years ago. The meat is now running with the JPM notice. I see. The way it works in a merger. I mean, there's much more evidence to bankruptcy than merger, so. "20 minutes to close." I haven't stopped and done the video. That's just too much info. I think I probably will close some positions. Probably my TD shares. I mean, it was good holding it because I held through the 112. I held all the way up. Could have closed up here for less of a loss, potentially break even, but I'm still uncertain on my cost value on that. If it starts to rally, I can always get back in. I don't know if I will, but that is always a choice. Oh, the freaking. Okay, I can close these at least. That's insane. Piece of crap. Remember the cover calls I did on it? Maybe it's worth it to do it. I don't know. Oh, man. Okay, I closed my cash secured puts on it. My shares. I mean, I could. I'll get my one free use of a pattern day trade. And I can have them strike from my record one time. Otherwise, I'm in position closing only for 90 days. I was like, yeah, I'll open cover calls. I couldn't even imagine a scenario where I was going to consider selling my whole position before tomorrow morning. Now here it is. We're in a position where I was going to sell all of it before tomorrow morning. I guess I'll just hold that one. So I sold out the cash secured puts in BBY out of the long term, which was like 1,900 shares. I'm still going to have these 2,400, so plenty of exposure. Yeah, because I can't close this cover call because I opened it today, basically. And I have to close the cover call to close the shares. I don't think I can just close the shares and have a naked cover call. That would be sketch too. Let's see. It's acting like I can do that. Wonder if it would let me. What? Oh yeah, rejected. Yeah, I can't do that. It's crime. No, were you around with AMC? That was happening like weekly with Adam Aaron. He'd offer shares, then he just would sell, and then it's like dating back to 1986. Yeah, no, you're right about the vested shares timer. I wasn't even thinking about that, it being scheduled. That's true too. If they were actually insider trading, great. That means nothing does. You can open and close. I know. Well, I guess I could change to cash. I could change to a cash account. And I'm not sure if I could do that. It's a margin account. I mean, I could just take it, but I was thinking of keeping some exposure anyways. So might be a stupid decision, but it's not actually that much money at this point, I don't think. Let me see. It's not even. I gotta look at my TD. I don't even know what's going on here. No, it's like it's not. It's 6 grand. I don't know, we're 6 grand right now. I mean, I'm down like 8,500 on it, so it's not like I'm closer to bankruptcy than being break even on it. If the company goes to zero. Yeah. We'll see. We'll see how it develops. I'll keep those shares in there. Man, that's crazy though. Crazy. Gonna be a few dimes next week. Maybe, we'll see. Last time, thank you during hours. I think if that's common or not. Not sure what you're speculating at, that they did drop during hours, but yeah, I'm not sure how common or uncommon that is. Yeah, Ace, you tell him. Hopefully news after hours for BBY, and hopefully it's not chapter 11. Don't jump. Not jumping anywhere. Thank you guys. Thanks for your 51 likes. Woo! Boring day turned into that. Appreciate it. Legends. I don't think they have to file it during market hours. Didn't they have until, I think, tomorrow to file the 10Q? Right? Man. Been a rough couple weeks. Woo! It was like bad fourth quarter for me. And then it's kind of been with the market. I don't know. The bull market here, for some reason, was better for me, even though I'm not necessarily long. Just for like a week or two, I had a window of stringing good trades, and then this is crappy if this pans out like this. I like that it halted up too. That's awesome. So it tested that that $2 level pretty much. We'll see if it comes back down there. Tiny gap still there. That would be a nice little support if it holds there. And if it's not bankrupt, this is all just hype, then quite likely could have another rally back up. I don't know. I don't know how to interpret their 10Q. Seems it's not like good news, but it doesn't seem like it's necessarily them going bankrupt. They're not saying they're doing that yet. They're just reiterating what they've already said. Trying to go out to the upside. Hurricane, you still holding those calls? You gonna close them in the after hours? They file whenever, and the SEC is the one that releases it? That's very interesting. Huh. That's a good point. That until March for what? Yeah, my cover calls. Look, these cover calls for Friday. These were like positive 35% before that drop. Now they're only positive 58. That like they haven't lost that much value. Didi on the merger. I've looked at some of it. A lot of it's very confusing. But I've looked at some with their bonds and all that. Yeah, no, I've definitely seen the hype. It is, and the speculation on tying this and tying that, and it could still be true. And this might just be a shakeout. This is peculiar that this happened so far after. So that is one thing about this that makes me think that this is fake. But yeah. This was like when Ryan Cohen, okay, BBY was at $30-something. We were all stoked. He has his shares, his options. It's going to 80. That's where his options were. And then he files that form saying he wants the right to sell his position, or he's going to, basically, intent to sell. Look at the new highs on SPY. And I was like, oh man, some people, tons of different misinformation out there. But the consensus ended up being, from all the hype, this doesn't mean he's going to sell, which of course it doesn't. It doesn't. No, it's intent to sell. But it's, he hadn't filed it before then, and BY just got into a high, and it was higher than his cost basis, and then he files that. So logic would tell you he's probably going to sell. And I didn't let that deter me. I thought, no, they're right. He's just saying that his intent to sell. And I can't remember all the different craziness. And then the next day he sold. And it was in that time frame that I actually entered this BBY position, cash secured puts. I think it was maybe a day or two. So talks, walks, acts like a duck. It's most likely a duck. But it is tough because the media and the manipulation and the hedge funds and the short distort, like they definitely try to mislead you, and this could be a big mislead, but you got to just practice good, safe risk management. So with that, I've closed some. I still have quite a bit of exposure for all the hopium, but like I said, it's not a huge amount, so I'm willing to hold it, basically. 10 Qs overdue. Yeah, futures are fun to paper trade. That honestly is better than options. It's easier. I'm not surprised it didn't get held. Yeah, I mean, the delay on the 10Q, like there was hype on that, which seems kind of strange, but 10Q is referred to last quarter, 2022, which was, yeah, that ended 26 days ago. There still could be an M&A. This is not off the table, and that it's not. They didn't say they're filing Chapter 11. If they did, this would actually be halted, and it wouldn't come back. I mean, at least not today. So yes, there's all those possibilities. It seems like the information in the filing was just reiterated information potentially we already had, but I think it was more than that, because I don't remember hearing about their credit loan basically margin calling them and upping their interest rate. That's all new. So they're getting squeezed from their lender, and so far we haven't seen anything about an M&A or how they're going to pay anything off. So yeah, that's the only new thing, is that their lender's squeezing them and upping their interest rate. Yeah, what is kind of crazy is the SEC can release it whenever they want. So that's sure resumed it. Yeah, you made a little profit if you can sell it. I don't know how you can sell it so quickly. You don't have to wait for trades to settle and stuff on there. Today is the day for business day, and tomorrow's the 27th. That is true. The day for business day. New high on SPY. We're squeezing. Good thing I realized those stupid losses on the futures. I could have gone long, but again, I don't see the upside as much as the downside. Unless if we break 408, then yeah, I could see, well, 411, but probably even a gap fill up there. But to make that big of a move, I think we'll probably need next week to have bullish day. I mean, the data, this isn't really running on that much like the GDP, jobless claim, like this isn't this isn't really from that. So that's why I'm not really believing it. And the VIX hasn't really been dropping. Look, the VIX is actually going up right now. But it hasn't really dropped a whole lot for this run. Like, dollar's dropping some, but it looks like it's hit a bottom. It's about to rally. I don't know. GME made a nice rebound. Wonder if my puts are still positive. Yeah, they're up 17%. Not bad. Should I hold the old? I definitely wouldn't. Not if you just got into it and it's something you've not had conviction with or know anything about, or that's super sketchy, especially with someone that's computer share that's just shutting it down. 15,000 paper shares. That's totally up to you. I don't know your financial situation. SPY squeezing into close. Do I have to do anything else with options? I don't know. I think I'm good. I'm just riding those. Those got closed. Okay, 3 minutes. I don't know if I'm gonna do a recap video. I might. It's already 4. I don't know what to recap. Like, I'm still somewhat confused by what's going on with BBY, so not a whole lot of answers. potentially 10Q is more bad news, not bankruptcy, but seems like their credit lenders are basically margin calling them, saying they want their money, and they're going to up their interest rate by 2%. But I didn't see any deadlines on like when you have to pay back or anything like that. As of November 26th. Was it though? Were they getting margin called November 26th? Because I don't think that was the same info. Could you share that with me, Philly, or anybody that has it? If that was the same wording from, I don't know if it was JP Morgan, but basically they're going to, no, because it actually had the 25th on it. Let me see. They actually specified it's effective as of the 25th. Okay, so this could have been the same as what was said. So it says as of November 26th. Yeah, is this the same wording as what was out in November? Because this even says as of November 26th. Now I'm confused. Buy is squeezing. The January 25th was when it was effective by, which is yesterday. Wow, sorry guys, holy smokes. Wakey wakey. But this, is that right? Second IPO chart. Hold BBY tomorrow. I don't know. I'm still trying to figure out what's going on. Like I see this. I don't know if it's new. It's new, but it's maybe old. But they were worthless if you held them till close, Hurricane. Thanks, Treeleaf. That was way too loud. Sorry. I forgot you guys even had that. Yeah, sorry. That was extremely loud in my ears also. So this is the same. The effective date on this was yesterday. So that's not new. And this is worded almost like it was released on the 26th. It says as of November 26th. Company, not necessarily. This could be worded like it just came out. I don't know. I'll try and figure it out. I mean, I guess I could always get back in, but yeah. It is interesting. Well, thanks guys for watching, hanging out. That was fun. CVX calls destroyed it. Oh, did you close it? Their earnings are after hours, aren't they? That killed, really? You probably got to be closing those. You're gonna have earnings, and you're gonna get a lot of IV crush. Hope you all bought in. Pre-market tomorrow. Yeah, they were pricing in what, like 3%, 4%. So it's got to be more than that for those calls to make sense. You held nice. Thank you guys for your likes, 55, and well done. I appreciate it. Trying to get more info on what's going on with BBY. What's the data for tomorrow? Tomorrow we've got PCE. And let's see what else. Oh yeah, it's over here. Tomorrow. Jobless claim. Wait, no, that was today, right? Yeah. PCE is the main one. Yeah, pretty much just PCE. Consumer spending. That's all pre-market. So we'll see. I could hit that 408 tomorrow. Big green Monday. Or big green Friday. Follow us on Twitter. Jump on our Discord. Both those are linked. No FOMC is not tomorrow. Next week, I believe. And sub up, like up, comment down. Happy money sticks around. Yeah, FOMC's next week. Thanks for your likes, guys. Thanks for your support. John Parker, Ace. Thank you guys for your donos. Legends, I appreciate it. Very generous. Yeah. Well. All right, GG. All right, peace out, guys. Thank you. I probably won't have a video today either. Too late. Too exhausted.